What was the last class we had? We had the discussion about the chapters, the subject we had basically. Just give me a recap of what we have and what we are going to learn, and we'll start with the first chapter we have. Our subject called is corporate and economic laws. We'll basically divide them into two parts: corporate laws and the economic laws. And we are not going to go in the same order as we have discussed here. We'll be jumping between corporate and economic laws whenever it is required. So we'll first and foremost we'll start with the corporate law, which is a combination of three different laws for you, three different parts of your syllabus, which starts with your Companies Act. Companies Act, then we'll have insolvency bankruptcy code and the corporate governance, which is going to fetch you somewhere around 60% of the syllabus. This is where usually more of case studies are being asked. So these are the three category of chapters, obvious, or otherwise I'd say these two category of chapters are where usually case studies are more often than not asked. So our agenda would be to learn them just not by memorizing the wordings, but also have the understanding of the concepts behind it. A case study may come from this part of the chapter. So start with the first chapter. We have the company formation and conversion. I know the chapter's name might be new to us, but the concept is not new to us. This is basically your preliminary and incorporation of company. Both of them combined together have been put into one particular chapter. This is something which you are already familiar, but still we have to go through. There are still questions being asked from this chapter. There are still questions asked. I'll just show it to you. This is the chapter incorporation, the preliminary and incorporation. There are still questions at the final level. So can't ignore it. We still have to learn it. Some students have gone through there. These are all the questions that have been asked. It is not that they have asked once or twice. They have asked multiple questions out of this chapter. There are few particular areas where they have been more focused upon. We'll come to that. But a lot of you might have gone through articles. A lot of you might have forgotten whatever we have learned in the last 6-7 months back this chapter. So we'll go through as if you have zero knowledge about it. But I'll take some gray area where I'll assume that you have the basic knowledge of the wordings. Say if I use the word member, I don't have to explain the word member. If I use the word ordinary resolution, annual general meeting, these are the words which are comfortable. I'll not explain those words, but I'll explain the concept behind them. That's it. Still, so let's start with the basics here. Companies Act, we have to understand this. This is not introduction done for this chapter. This is an introduction done for our future chapters to come. Start with the basics here. Any business entity, the business entity concept started with a logic of sole proprietor. It was not initially a company format of a business. It started as a sole proprietor where we had the logic, we'll have owner. How many owners will be there? One owner. A single owner will do the business activities. How does a single owner do business activities? Everything revolves under one category. They need money to start it. So the single owner had to bring in finance to the business, and this finance was being managed by the single owner in however possible ways he can to generate profit out of it. What was the basics here? How many owners were there? Single owner. The single owner had to bring in what to the business? Finance. And along with the finance, he had to also manage the business. That means he should have skill. These are the two basic requirements of any business entity: finance and skill. He had to bring in finance to start the business. Once he had the finance, he has to manage those finances in the right optimum situations to make a profit out of it. He had to bring in skill. But the problem starts arising here because he has only one member to decide the matters. Try to understand it. If you are the only person to decide matters, will it take time or will it be flexible? Flexible. I can take decisions in a quick manner. I don't have to adhere to, I don't have to account to any other person. I can take decisions as and when I want, and whenever I want to take a decision, it is very easy for me to take decision. The management was easy, but the skill that person brought in was very limited in nature. You as a cost accountant, are you a cost accountant? Yes. Are you a cost accountant? You have been trained to be a cost accountant for a period of close to 4.5 years. Your foundation level, then inter, then your articles, then your final level. A close to 4.5 years you have been trained to become a cost accountant. Try to understand it. After becoming cost accountant, do you have knowledge about how a machine works? You are experts, right? How a machine? No. Do you have knowledge about marketing? Marketing? No. That is not our core category. Do you know how to do digital marketing? You are experts, right? We are experts, but we are experts in only one field of area. We have knowledge about finances. If you talk about finances, I'll act an expert. I have knowledge about it. I know how to manage finance. but I don't know how to do business activities. Try to understand it. You have been trained for 4.5 years to just understand one thing, finance. Is that one department enough to run the business? As a business entity, you must be having skill in one department or multiple departments. We must have knowledge and skill regarding multiple different factors of the business. That's where business becomes profitable. But you as a cost accountant will bring only one skill to the table. We must have multiple skills required, and you're not expecting a single person to have multiple skills. That's where we started evolving the logic from sole proprietorship into a partnership form of a business. Partnership form of business was bringing in multiple people together, where each of the person was able to bring in a different skill set. Each of the person was able to bring in finance. We have double the amount of finance, we have double the amount of skill. Which is a better way of doing business, sole proprietor or partnership? But partnership came with its own disadvantages, stating that if I had to take a decision, I have to consult my partner. If I had to take a decision, I cannot do it on my own. I have to do it along with my partner. I have to convince my partner for business activities. It was difficult to take decisions, but still it was doing business at a larger scale. It was doing business with more amount of skill in a better, efficient manner. But there comes a problem again. Partnership is unregulated in nature. If you remember, the partnership law stated registration of partnership is not mandatory. It is still optional. Today it is still optional. That means you don't have to get regulated with the authorities. If you're not regulated, are you required to maintain books, file books, pay tax? You're not even maintaining books. Government doesn't even know how much profits you have made. Will you pay taxes? No, you'll not pay taxes. You're not regulated. Government doesn't know whether you're doing legal business, illegal business. Government cannot come and inspect your books of account. Government cannot come and inspect the business activities. Here's the problem where the government is being put behind the curtains, where the government doesn't know what is being happening in its own country. But the partnership law is drafted in such manner that it is unregulated in nature. You do whatever you want, I'll agree to it. Then we slowly, what happened? We wanted to regularize the business activities, and we started creating a concept called as company. Now what happened? Try and remember this very careful. When it comes to company format of a business, company is something which comes into existence only when it is, I want proper technical word, it is called as incorporated. Nothing but incorporation is nothing but bringing life to the company. Company is an artificial person or natural person? Who creates the company? Authority. That authority creating life to the company is technically called as what? Incorporation. Try to understand the registration word here itself. Incorporation is bringing the company into life. One of the way in which we incorporate the company is to register the documents with ROC. Registering documents is nothing but submitting documents to ROC. By this process, I'll create a company, I'll bring the company into existence. Which is a wider term, incorporation or registration? Incorporation. Registration is one of the ways in which we will incorporate. Are you getting the difference here? So always use the word incorporation, don't use the word registration unless you want to submit documents. If the company wants to come into existence, we'll use which word? Incorporation. Now I'll have a little more details here itself. I know you're comfortable with these logics. RBI, it is a company. Yes, it is a body corporate. SEBI, body corporate. Your ICMA, body corporate. These are all body corporates. They're all body corporates, but who registered them? Who incorporated them? Are they companies? Yes, they are companies under Companies Act today, but who submitted documents for this incorporation? I know your silence is actually a correct answer. Nobody submitted documents. Nobody submitted documents. It was not registered. It was not registered. No registration happened, but it got incorporated by a special act of a parliament. Are you getting the difference here? It was not registered. Nobody submitted documents. Nobody prepared documents for it, but it came into existence by an act of the parliament. Now give me the difference here. Is RBI incorporated or registered? Incorporated but not registered. Lakshya? Registered and then it is incorporated. Are you getting the difference? Now these companies which are not registered but incorporated, which comes into existence by a special act of parliament, are called as statutory companies. They are coming from the law. They are called as which companies? Statutory companies. The regular companies we see around us are called as registered companies. So we have two categories of companies here. One is called as Statutory companies which comes into existence, which is incorporated by an special act of parliament. There are other companies which get registered with ROC, which are called as registered companies. End of the day, can I say it is statutory company, registered company? End of the day, they are all incorporated. Can I conclude everything with incorporated? A statutory company is also incorporated. A registered company is also incorporated. But what will we learn as cost accountants? Registered companies. Statutory companies, I'll not bring it into existence. If a client comes to you, he'll come to you for which company? Registered company. Our focus is more on the registered companies, but have a clarity. We have two category of companies here called as statutory company and registered company. Give me the meanings of it. Statutory company, is it incorporated? Yes, but it is incorporated by what? A special act of a parliament. Registered company, is it incorporated? Yes, by submitting documents to the ROC, registering itself with the ROC. We'll come to a little more details in a bit. Now talk about company. Does the ROC know about, the authorities know about the existence of company? They have to submit documents. They have to maintain books. They have to get it audited. Now can I say government knows what's happening in this company? Legal, illegal, I can inspect the books, I can conduct investigation, I can impose penalties. I know exactly what's happening in the company. Now try to understand, step into the shoes of government and answer this. Which is better, partnership or company? Company, because I know what's happening in this company, I can regulate it correctly. But if it from the business person's perspective, give me the answer, which is better, partnership or company? Partnership. I don't even have to maintain books of accounts. Take in a Pani Puri shop. Ready. Pani Puri shop. What happens? Do they maintain books of accounts? Books of accounts. They'll get it audited. They'll appoint the they'll do cost or no. They are regulated or unregulated. But don't you think they'll earn money? Just calculate the amount of money you donate to him every year. Not you guys, but you. You donate, I mean, you spend money with him. Lakhs of rupees he'll earn. On an average, a small, don't get encouraged. You are still going to do CMA itself. On an average, a small Pani Puri shop can earn somewhere around 30 to 40,000 on a monthly basis, bare minimum. I mean, I'm not asking you to go do it. You'll appoint a person and it can earn somewhere around 30 to 40,000. It's a good business, depends on the place. You just have to get a place and permission. Everything is sorted. 40,000 per month. I know you're already calculating per year. Now, will he pay taxes? No. He doesn't work throughout the day. He works maybe 3 to 4 hours in a day. He earns. It feels more attractive, right? But still, does he pay taxes? Government is losing because of this. Government states that I want businesses to be in a regulated format, but I still have legally authorized Partnership Act. Partnership Act is still existing. There comes section number 464 of the Companies Act. What is it? 464 states that if you're doing business at a large scale, I can't take this risk that you are unregulated. If you're doing business at a small scale, it's fine. I understand you cannot comply with all Companies Act rules and regulations. But if you're doing business at a larger scale, you have to come under Companies Act. States that if the number of persons in a entity are more than 50, it can do business activities only when it is converted into a company. So they have indirectly stated that the partnership can have how many partners? 50. If you observe the partnership definition, a lot of you have gone through the partnership definition in a wrong manner. Give me the definition of partnership. When 2 or more persons is not a definition at all. When persons is a definition. 2 or more is our interpretation, because try to understand, end of the day, partnership is an agreement. Agreement word comes not from partnership law. Agreement word comes from Indian Contract Act. Contract Act states that to be forming an agreement, we must have at least. Partnership never told 2 persons. Partnership simply stated an agreement. Agreement between persons. It never mentioned 2 or more persons. It is your interpretation, you have done it. It is the wordings used as agreement between persons. And they also did not mention the 50 limit. 50 limit was mentioned by the Companies Act under section number 464, stating that if you want to have more than 50 people, that means you're doing business at a large scale. I want you to be regulated. I want you to be converted into company. If you are not converted into company, you are not allowed to do business. So the 50 limit was given by whom? Companies Act or partnership? Companies Act. So one of the major reason why companies are being promoted is what I want it to be regulated. Remember that logic. Come to second aspect to it. Partnership law, they have maximum how many partners? 50. Now try to imagine this in a very practical approach. 50 partners for the life, you may be somewhere around 19, 20 years of age or 20, 21, somewhere there. For the last 20 years of your life, give me 10 names whom you can trust with your life. Except your family members. Okay, one. Fine. Give me 10 names. Satya sir, Murli sir, Rajkan sir, Gopi sir. Give me all the faculty names. It's done. Now try to understand, on paper 50 partners looks good. On paper. Practically find me 50 partners who are having the same mindset and ideology. No. So can I say partnership will have on an average 4 to 5 partners at max? At 4 to 5 partners will bring in small amount of capital. I cannot do business at a very large scale. If I had to do business at a very large scale, I have to try to understand it. If we have 4 partners and each partner brings in rupees 10 lakhs, I'll have a total capital of 40 lakhs. Now I want to do business at a larger scale. I want more money. So what's the option? I cannot go find a person who will be able to find match with my ideology. I'll rather ask my existing 4 partners to bring in more money. I've asked 50 lakhs for each partner. Fine, 50 lakhs. Total amount was 2 CR. How to increase the capital again? I can ask my partners again. 50 lakhs is a good amount of money they've already invested. Can they invest more than that? I cannot increase the amount of capital. There comes the Companies Act. Companies Act states that forget about amount. Forget about amount of money to be invested. Let's focus on the number of people. What if I remove that number limit of 50? What if I remove that 50 limit and you can raise money from hundreds of thousands of people or crores of people? Just imagine if they're raising money from 1 crore people and each of them brought in just a mere rupees of 100. Business can be done at a very large scale. That's possible only in case of company format of business. Company format of business allows you the unlimited number of members, where even rupees 100 raised from each person can fetch you crores of money to do business. Not at local level, but at a maybe global level as well. You can start doing business activities at a very large scale. Which is better to do business? Which is better to do business activities? Small scale or large scale? You know this, economies of scale. Whenever business costing started, I hope you guys have done this. Fixed cost always remains the same. Total fixed cost remains the same. Fixed cost per unit differs. It reduces whenever you do business at a large scale. That means the total cost of the company will be reduced, but the sales will be increased. You'll have more profits. You'll make more profits if the company starts doing business at a larger scale. But Companies Act states that I'll not give you all these benefits free of a cost. You have to comply with rules and regulations. Comply with rules and regulations. So that's enough for why Companies Act is required. Let's understand the history of Companies Act quickly. The Companies Act in India started in the year 1948. Sorry, 1848. 1840s is what it came into India. Obviously introduced by which government? British governments. They have introduced Companies Act to India. It was initially called as Joint Stock Company. Later it modified itself to be called as Companies Act. We have 1913, we have 1886, we have 1956, we have 2013. So just a brief introduction of it. 1956 Act and 2013. What happened in between it was, we have repeal. I'll give you the background of 2013 whenever concept comes in. I'm not going through the history of it. Heard about Satyam scam? Yes, Sahara scam, Harshad Mehta scam. We have multiple different scams happened between 1990s to 2010. Because of those multiple scams that has happened, that's where the reason 2013 came into existence. We'll go through those scams whenever it is required in the future, but I want this word you guys to have to understand, repeal. What do you mean by repeal? What happened with 1956 Act? Just imagine yourself as a judge and imagine the situation. Whenever an act is repealed, what does a judge do? He creates law? No. Law is created by I hope you guys have this knowledge. Legislative body, executive body, parliament. Comfortable with that? Sure, right? So law is created by the legislative body, that is nothing but your parliament and the president. Once a law has been created, the law is implemented by the executive body. While it is being implemented, if there is any disputes, those disputes will be solved by the judicial body. If you try to understand the word clearly, give me a book, come on. Any book. Now try to understand it. If I'm a judge, I don't create law. Law is created by legislative body, and the legislative body gives me the law. I apply this law. Apply this law to take a decision whether something is right or something is wrong. I don't create, I just apply the law which is given to me. So what happened? When the Companies Act 2013 came into existence, the Companies Act 1956 was snatched from the judge's hand. It was taken away from the judge's hand, and he was given with a new book called as 2013, and the old book 1956 got completely destroyed. Just imagine, it was put on fire. Not literally, but try to understand. It was put on fire. Does the book exist anymore? What is the only book we have regarding companies today? Companies Act 2013. What happened to the previous Companies Act? It got, give me the technical word, it got repealed. What do you mean by repealed? It got destroyed. Completely destroyed. It got obliterated from the very origins. It was completely put on fire. Does that book exist anymore? No. What is the only book we have? Companies Act 2013. Now, Reliance Industries. It got incorporated in 1970s. It got incorporated under which act? Companies Act 1956. But are they still a company today? But is this act existing? Are they still required to follow Companies Act? Only Companies Act that is existing is 2013. Now that's where the definition starts from. What do you mean by a company? Company means a company incorporated under this act. What do you mean by this act? 2013. Or you might have been incorporated under which act? Any previous company law. If you are even incorporated under previous company law, you still have to apply Companies Act 2013, because there is only one book existing now. Give me the definition, meaning behind it. Company, just divide it. Company means a company incorporated under this act, that is 2013. Say if we incorporate a company today in 2026, it falls under which category? Company incorporated under this act. Or it might be a company which is incorporated under, very carefully they have used the word incorporated or registered. Incorporated, which includes both registered and statutory companies. Give me the definition. Company means a company incorporated under this act or any other. Wherever you might be incorporated, I will still apply you. Who is applicable? Companies Act is applicable to which company? Every company. You might be incorporated under my act, or you might be incorporated under previous acts. Previous act. I don't use the word act. The word act is used only when it is in enforcement today. That's the reason they use the word previous company law. Now give me the entire definition in a stretch, Emma. 2 clause 20 defines the word company. What's the definition? 2 clause 20 defines the definition company. Company means a company incorporated under this act or any previous company law. Is it fine? The first definition we have learned, section number 2, clause 20, company. Now this Companies Act 1956 to 2013, lot things have changed. Now this 2013 Act we have starts with 3 basic features from here. So let's start the basic introduction of Companies Act 2013 now. It is a act of parliament again. It is, what do you mean by act of parliament? It was passed in the parliament. Which house of parliament? Both the houses of parliament. I hope you guys are comfortable with this logic. If once it is passed in both the houses of parliament, it is assented by the president. Nothing but signed by president, but I have to use a technical word, assented. Passed in which parliament? Both the houses of parliament, then it is assented by the president. Once it is assented, it becomes an act. If it is assented by the, not law, it becomes an act. Once it is assented by the president, it becomes a central act. What do you mean by central law? It is applicable to part of India or whole of India? What about Jammu and Kashmir? Article number 370 was abolished. Once it is abolished, they don't have any special status. Hence, it is applicable to part of India or whole of India. Article 370 is a discussion that can happen outside the class, but just remember Article 370 was giving a special power to the state of Jammu and Kashmir. Now the special power has been abolished. Once abolished, every single central act in India today is applicable to whole of India, including Jammu and Kashmir. Now, it was assented by whom? The person called as President of India. I'm not giving importance to any person, I'm giving importance to the position, President. The President has signed it. It was signed on 29th August 2013. On which date? 29th August 2013, but it was effective from 30th August 2013. A lot of people have this misconception here as well. 30th August 2013, was it effective from which year? 30th August 2013. Just imagine this chart. During this period, which act was applicable? Companies Act 1956. During this period, which act is applicable? 2000? Slightly correct. What happened is, on 30th August 2013, we did not bring the entire Companies Act into existence. The Companies Act came into existence in a phased manner. Few sections came on 30th August. Few sections came in the month of September. Few sections came in the month of December. Most of the sections came into existence on 1st April 2014. They did not get repealed on a single day. It took us time to implement it. Though it started its implementation on which date? 30th August. The entire act was implemented on which date? 1st April 2014. So try to understand it. The period between 30th August 2013 to 1st of April 2014. In this period, can I say some parts of 1956 Act was also existing? Because the 2013 was not fully implemented, some parts of which act? 1956 was also existing along with 2013. Both of them were coexisting in this period. But it got completely obliterated on which date? 1st April 2014. Not every section came into existence on 30th August. It was introduced in a phased manner throughout a period, but what was the major sections introduced in? 1st April 2014. Now this new act we have 2013 has a total of 470 sections. How many? 470 sections. Out of these 470 sections, what happened is, to make people understand the law in a better manner, sections which are relevant and sections which are connected with each other have been put under one category, that each category is called as a chapter. Try to imagine this. Deposits. Entire concept of deposits was put under one category of sections. This category was called as a chapter, so that you'll understand the law in a better manner. Just imagine if, I hope you remember the numbers maybe. Section 73 talks about prohibition on acceptance of deposits from public. You cannot accept deposits from public, but you can accept deposits from members. If you're not comfortable, that's fine. This is just an example for it. Imagine if this deposit section is given under 73 and 76 is given as section number 460. Will you be able to link between each other? The linking is possible only when they're grouped together. That's where the topic comes in chapters. How many sections are there in total? 470, and these 470 sections itself have been divided into 29 chapters. Each chapter has certain set of sections for better understanding of the act. How many sections in total? Those 470 got divided into how many chapters? 29 different chapters. And to help you understand this 470 sections and 29 chapters, they've given 7 schedules. How many schedules in total? Given the basic introduction of Companies Act. Companies Act was assented by the on 29th August 2013, but it was effective from 30th August 2000, but it was effective not on a single date, it was effective on a phased manner, where it got fully implemented on 1st April 2014. Once implemented, it has a total of how many sections? 470 sections, divided into how many chapters? And having a total of 7 schedules. Now start with the act's name. I know it is funny to learn the act's name now, but it is title. What do you mean by title? The name of the act. We have 2 types of titles for every single act: short title and a long title. Now, why is short title? What is long title? I'll explain the meaning once the titles are understood. What is short title? The Companies Act 2013. That's your short title. What's a long title? What is the short title at least? The Companies Act 2013. What's the long title? A long title basically states that I'm not gonna just define the act, I'll explain the meaning of the act. I'll explain the scope of the act, I'll explain the objective of this act. What was the objective of 2013? It was not a new law at all. The law was already existing, but it was outdated. Circumstances of India in 1956 and 2013. Changed, I would say it is a different country. 1956, we did not have even food to consume. We were not even having enough food to consume. And now in 2013, we are the fourth largest economy in the world. We have changed lot of things between the 60 years of time. Environment has changed. If the environment has changed, the law should also adapt to it. We have not made a new act. We have amended the existing laws which were existing, and we consolidated everything. I want technical words here. What is the Companies Act? Scope and meaning of Companies Act. An act to consolidate and amend the laws relating to companies. All the laws relating to companies got consolidated into one place, and they have been amended to match the current circumstances in India. What's the two technical words you remember? It is consolidating and amending. Give me the wordings here. An act to consolidate and amend. Amend what? All laws relating to companies. At the wordings, what is the long title? An act to consolidate and amend. Amend what? All laws relating to companies is your long title. Why do we have two titles now? Try to understand it. You go to your father, you go to your mother and state an act to consolidate, they'll slap you. What are you talking? Consolidate, amend all companies. They'll not understand it. And I cannot, every time I want to refer to this act, I cannot use this long title. It will be difficult for me to refer the act. Short title is used for convenience. When I want to refer the act for convenience, we'll use the short title. But to understand the meaning of the act, we always use the long title, which is better, long title. But for convenience, short title. Usually for convenience, I'll use the word what? Companies Act 2013. But what's the actual meaning of this act? Give me the proper words. An act to consolidate and amend. Amend what? Laws relating to companies. Any doubts on that? Every act has how many titles? Two titles. Short title and the long title. We have just discussed the extent. It is applicable to whole of India, including the Jammu and Kashmir. At section number 220 is completed. Give me the definition of a company. Means a company incorporated under this act or any previous company law. You might be incorporated wherever, you will be applicable with Companies Act 2013. Now, basic features of companies. We'll start with the basic feature. Who gives money to the company? Shareholders. The shareholders provide money to the company. They provide finance to the company. And company, as per the separate legal entity concept, company cannot do business on their own. Yes, give me a little more expansion of it. How do they give finance? The company sells them something called as shares, and for which the shareholders have agreed to pay a price. Now try to imagine company as a separate person. I have purchased certain goods from a company, from a person, for which I have paid price. And this price given to the company will use this money to do business activities. Is it fine? Are you getting the flow clear? Who gave money? Why did they give money? They did not donate money. They have purchased something. They have purchased what? Share. What do you mean by share? Forget about the technical word. What do you mean by share? A proportion in something. I have a share in something. What do you mean by share in Companies Act? I have a share in the company. Company's ownership. I have ownership in the company. I have a share in the company. Now this shares purchase, I'll pay price, and this price, the money which the company received, will be used to conduct a business. Is it fine until here? Now try to understand. What do you mean by share? A piece of paper? What is given once you have given finance to the company, they'll give you a share certificate. Share is not a piece of paper, ma. Share is not a piece of paper. Share represents certain rights in the company. You have a right to attend general meeting. Share is not just a piece of paper. The ownership provides you certain rights in the company. Try to understand it. This piece of paper is nothing. This piece of paper is just an evidence that you are a shareholder, but what does a share actually give you? Share gives you certain rights in the company. Right to vote, right to speak, right to attend general meeting, right to eat snacks. I mean, once you have attended, obviously we'll have a right to eat snacks. That's the most important part. Which is more important, right to vote or right to eat snacks? Obviously snacks. Inga. Next, what else? What else do we have? A right to receive notice, a right to call for extraordinary general meeting. We can demand for general meeting, right to inspect the financial statements, right to remove a director, right to appoint a director, right to appoint an auditor. All these rights we have are represented by the word share. Just imagine, you have to remember this logic. Share is not a piece of paper. Share is a right in the company. A lot of rights have been given to a shareholder. Now this business, who does this business? Company is an artificial person. Company cannot do business. But here's where the entire process of Companies Act starts for our syllabus. Shareholders are fools. Not you. Shareholders are. Do they have brain? Do we have brain? Shareholders, do they have brain? Do they understand business activities? Do they understand Companies Act? Can they be manipulated easily? We can manipulate them. We can manipulate them easily. Understand it. The shareholders were such fools that they thought that company will do business on their own. I just have to give money to the company and company will do business on its own. But company is an artificial person. Can the company do business on its own? Then company stated that fine, you are fools, I agree. I'll appoint directors to manage this finance. Get the word very, very clear. Who appointed directors? Company, not shareholders. Shareholders did not have the right. Who had the right to appoint? Company, but company being an artificial person, how would they appoint? With the help of the shareholders. It is not directors are appointed by shareholders. The words are directors are appointed by the company. But company is an artificial person. How would the company work? With the help of its shareholders. We have this logic. We'll learn this logic in the directors topic later. Directors are appointed by the company, not the shareholders. Auditor is appointed by the company, not the shareholders. The Companies Act gives power to the company, not to the shareholder directly. The shareholder exercise their power with the help of, through the company, not directly. Are you getting the logic clear? Can a shareholder appoint director? No. Shareholder cannot appoint a director. Who can appoint director? Company. So this company appointed directors. They appointed directors to do business activities. What do you mean by directors? Let's understand this word also. We want people to run the business. To run the business, they have to bring in what? Finance or skill? To run the business, what is required? To start the business, what is required? Finance. To run the business, what is required? Skill. But we have just concluded. Shareholders, do they have skill? So we had to appoint people who have skill. We will appoint people who are called as experts. Experts in multiple different fields. We'll appoint directors. We'll appoint experts. Those experts technically under Companies Act are called as directors. Director is a word given by Companies Act. Logically speaking, who are we appointing? Experts. These experts are technically under Companies Act called as what? Director. Can we have a single expert and expect him to do everything in the company? That's the reason Companies Act stated that we will have number of directors. We'll have number of directors where each director is going to bring in one set of skill or different set of skills. Different set of skills. All the experts combined together, all the directors combined together will be able to do business in an optimum manner. We have done this yesterday. Forgot the names I've taken yesterday. Jubair, right? Forgot your name. Ekant. If you remember the yesterday's example we had, Ekant was a director in finance. I'm a director in legal category and you are the directors in operations. What are the three directors we have? How many directors do we have? 3. Who are these 3 directors? One director is having knowledge about finance. Other director is having knowledge about legality, legal activities. Last director, assuming you guys will have the operations. Now, try to understand it. Which director is important for the business? All 3 directors. Now, imagine this. If a single director takes a decision, company will make profits or loss? Again, same answer. A single director takes a decision. He doesn't know how the operations work. He only knows finance. If a single director takes a decision, Still loss. Now try to understand the problem here. If the decision is taken by all directors combined, profit or loss? Profit, we can take a better decision. The Companies Act has not given powers to a director. Powers were given to all the directors combined together. All of them combined together are technically called as board of directors. Try to understand. Can a director exercise powers? No. Powers are given to, not director, powers are given to board of directors. Can the board of directors take a decision? Yes. Can a single director take decision? No. Powers are always given to whom? Board of directors. Now these board of directors will do business activities. While they are doing business activities, they are acting as principals or agent? Agent of the, because company appointed them. Company will act as a principal. Now this company acting as principal, try to understand, if agent enters into contract on behalf of the company, any profit arises. Profit belongs to the principal, company. If loss arises, loss belongs to the, can I say for this business transaction, shareholders nowhere to be seen? Shareholders are available in this transactions? No. Who enters into transaction? Board of director on behalf of the company with a third party. And the third party has entered into contract with company with the help of these board of directors. Board of directors acting as principals or agents? The shareholders have nothing to do with the business. There comes the logic, separate legal entity, corporate will. I'm going very fast on this, corporate will. Are you comfortable till here? I'm going very fast on logics. I'm assuming that you have this basic knowledge, so I'm going a little fast on it. If you have any doubts, stop me then and there. I'll have a little more detailed explanation on it. This is something, maybe if it is taught at the foundation level, for CA foundation, it will take at least 3 to 4 classes to complete this part. Or at inter level, we have maybe taken a couple of classes to complete till this part of the syllabus. It is hardly 1 hour we have completed all these logics, but I hope you guys are comfortable. If not, you can stop me then and there. I'll have more detailed explanation on whatever topic you want. Fine. And again, we are not just discussing it for exam perspective. This all will be used by me for the next topics to come. It will be such kind of a classroom or teaching style where I'll slowly inject concepts from in your brains today, which will be used maybe within 1.5 to 2 months later also. I'll try to subconsciously create that way of thinking before the concept comes in. We have discussed a lot of concepts which will be helping us under section number 152. I've given an introduction to that already. Knowingly, unknowingly, you have that knowledge. 152 is something which will become easy for you when it comes actually. I've given introduction about section numbers 160 also a little, 161 also little. I've given some, knowingly, unknowingly, you have knowledge about some more sections already that will make other sections easy. These are not just learned for a formation chapter, also for the rest of the chapters as well. And again, I've also given for logic regarding 179, I've given logic regarding 180, I've given logics regarding some more sections already coming in the near future. So be conscious about every single word we are using in the class. Company is a principal or agent. Board of directors are, they'll be working on behalf of the contracts entered by these board of directors. Who is held liable? Company. Now imagine this correctly. The third party has entered into contract with company and there is a corporate veil. Corporate veil is nothing but a curtain, a parda behind which we have our shareholders. We have our shareholders and we also have our board of directors who are making this company work. Third party can see whom? Only company. Rest of people are hiding behind the corporate veil. If they are hiding behind the corporate veil, the third party is able to see only the company. Third party can file a suit only on the company. Third party can take action only on the company. Company is the only person held liable. That's where separate legal entity comes in. But if the board of directors, can I use this word? Company is a puppet. Does it have emotions, feelings? Can it die? It is a puppet of shareholders or board of directors? Shareholders or board of directors? Whose money? Your answer is wrong, but let me draft your mindset. Shareholders are the owners of the company. Who should have run the business? Shareholders. They should have run the business, but the fact that they don't have skill to run it, we have appointed. Board of directors. The shareholders don't have skill. The shareholders don't have time. They don't have enough understanding of the business to come and do business. Hence, we appointed whom? Who should have run? This is important, Amma. Who are the owners of the company? Shareholders who have given finance to the company. Shareholders who have rights in the company. Shareholders who should have run the business. Shareholders. But because shareholders don't have enough time and skill, we appointed. Shareholders had the original power. They delegated their powers to the board of directors. Who had the original power? Shareholders. But they delegated it to, but not delegated entire powers. There are still some powers which are still in my hands as a shareholder. Board of directors cannot do everything on their own. Try to imagine this. We have learned these logics. Buyback. We have to get approval from the shareholders. Alteration of MOA. We are altering our name clause. We have to get approval from. Can the director do it on his own? It is not powers of director. It is a power of a shareholder. Imagine this. If this is the entire powers of the Companies Act, majority of the powers have been given to the board of directors. Certain powers have been kept with the shareholders. Rest of the powers can be done by board of directors. But certain powers have to be with the prior approval of the shareholders, which will happen in the general meeting. Now try to imagine this again. Who has the ultimate power in the company? Shareholder, but they delegated their powers too. Did they delegate all the powers? They delegated majority of the powers, keeping some powers reserved with themselves. I've reserved certain powers which will be exercised in the general meeting. Rest of it can be done by board of directors. But can I say that now? Repeat my answer. Repeat the answer again. Company is a puppet of. For some matters, it is a puppet of board of directors. For certain matters, it's a puppet of. Can I say if I'm talking about these category of things, who will take the decision? Shareholder. It's a puppet of shareholder. If I'm talking about rest of the Companies Act, it's a puppet of. Conclusion is that company can be controlled by board of directors or even shareholders. Both of them control in their own powers. In their own manner, they can control it. Given the technical word, who can control the company? Either board of directors or even shareholders, but majority control today is in the hands of. But the ultimate control is in the hands of shareholders. Are we clear? Again, this is the introduction for the coming definition subsidiary company. I'll have this logic. Any doubts in that? Sure. Now, company entered into contract. The corporate veil concept has been established. What's the first feature of company? A separate legal entity. The separate legal entity is giving you corporate veil, where the acts done by the company, who is held liable? Company itself. It was established in one of the famous case studies, Salomon versus. Heard about it, right? I'm not going to go much detail. They have not given concept on it, but just remember the case study was the stepping stone for this concept called a separate legal entity and independent entity. We are distinct legal person. We are natural person or legal person? Company. I mean, not we, am a company. We are natural person. Company is a legal person. It is treated separate, distinct legal person, or it is called as artificial judicial person. Judicial means it is created by the law. Artificial, it is not natural in nature. Then coming to the liability part, from the same concept, we will have the liability logic explained. If the separate legal entity is there, third party will file a suit on. Third party will recover money from. Third party can demand money from shareholders. Liable or not liable? Not liable. Shareholders are not liable for this part, but shareholders are liable for the shares they have purchased. It is simply a goods transaction. You go to a supermarket, you purchased a chocolate. Say you went to Ratnadeep, you have picked up a 10 rupees chocolate and you ran from the market. Do you have a liability? Yes, liability to pay 10 rupees. Fine. The supermarket owner was known to us. We paid rupees 5 and we ran. How much did we pay? Is the liability still existing? How much is existing? Share is nothing but your chocolate amount, a good. You have purchased a share, you have purchased a good. For this good, you have promised to pay rupees 10. You have paid rupees 5. Is your liability still existing? Liability is existing not for the contracts of the company, but liability is existing for the share contract you have entered. You entered into contract with the company, you are related to the company based on the share contract. If you have agreed to pay a price of rupees 10 and you have only paid rupees 8, is your liability still existing? What is your liability? If the supermarket owner comes to you and states pay 10 more rupees, will you pay? You've already paid how much? 5. Okay, fine. 8 is fine. Your chocolate was how much? You have already paid how much? If he comes and demands, does he have a right to demand? But he can demand a maximum of 2 rupees. Will he demand more than 2? If he demands more than 2, will I pay? Do whatever you want, go to the court, I don't care. I've already eaten the chocolate. Try to understand it. The good was purchased for a price of 10 and you are liable to pay 10. You have made part performance of 8. Your liability is only restricted to the unpaid value of share. Are you getting the logic clear? Your liability is what? How much is your liability? That will arise only when the company makes a demand. Share contract is a demand contract. Who will demand it? Who will demand it? Company. Demand means what? Calls. They'll make a call. They'll demand money. How much can they demand? In this case, how much can they demand? Always remember, it is not 2, it is maximum 2. Can they demand 1? Can they demand 0.5? 1.5? 3? Answer is they can call a maximum of 2. So if they can call maximum 2, your liability is also maximum. What is your liability in this case? A maximum of 2 rupees. Give me wordings clear. Not 2 rupees, give me the concept clarity. How much is the value of the share? How much is the paid value? How much is unpaid value? What is your liability? Maximum of unpaid value of a share. Your liability is limited or unlimited? Limited or unlimited? Now imagine this. Do you have knowledge? Be vocal about it. You accept it. You are shareholder. Do we have knowledge? Do we have skill? Do we have understanding of the business? Are we fools? Sorry, are you fools? Fine. This company does business activities. They do business activities, enter into contract with a third party. Are we clear with till here? Say assuming we are the shareholders, the board of directors were appointed, say assuming Hasni was appointed as a board of director. Unfortunately, she was appointed as a board of director. We did not know, but we appointed her. She is sound mind or unsound mind? She is. We'll at least assume sound mind as of now. She is sound mind. She was acting as a board of director. She entered into contract with a third party. Just imagine this. If such director enters into contract, company will make profit or loss? Profit or loss? Huge losses. We'll have this discussion only for one share amount to make the numbers easy. You have agreed to purchase one share worth rupees 10, out of which you have already paid, say, rupees 7. How much is the paid value? How much is the total value you have agreed to pay? How much is your liability? Maximum of 3. And now company has how much in their pocket? 7. Separate legal entity, always treat them as 2 different contracts. Are you getting this? We have 2 different contracts entered here. The first contract between shareholder and the company. The second contract between company and the third party. Now company goes and enters into contract with third party and makes a profit of 2 rupees. Profit belongs to the, we have discussed this already. Profit belongs to the company. The company makes a loss of rupees 2. Loss belongs to the. Now third party will come demand the company. I have invested how much? 7. I have created a total liability of 9, making a loss of 2. Are you getting the word loss and liability difference? What was the amount invested? 7. How much liability do I have? 9. How much is the total loss I have? From where will I pay this money? If I have liability, I also have asset. What is my asset as a company? Unpaid value of share. I'm linking the dots clear. I have a liability to pay how much? I have a liability to pay a total of 9. How much do I have in my pocket? 7. Can I pay 9 with the 7 rupees? No. I have to have more money. How would I have more money? I'll go demand. Demand the shareholder. How much can I demand? Maximum of 3. How much do I require? 2. I'll demand how much? 2 rupees. I'll pay my liabilities. Is it fine? Chalo, make it a little more clear. The liability was 11 rupees. How much do I have in my pocket? How much is my total liability? Do I have enough money to pay? So I'll now go to my shareholder. I have an asset. I have right to receive money. I'll go demand. Can I demand 4? Does the shareholder carry your business? No. Shareholder states I have promised to pay only. I pay only. I have already paid rupees 7. I'll pay a maximum of 3. I don't care what happens with your business. A lot of people have this wrong conception again. Company's liability is unlimited. Shareholders' liability is limited. Company's liability. If say the liability was 15, company's liability is 15. Members' liability, shareholders' liability is maximum 3. 10 lakhs. Company's liability. Company's liability is unlimited. Members' shareholders' liabilities are limited. Are you getting the difference here? It is not company's liability that is limited. Company's liability is always unlimited. Shareholders' liability is limited. Limited to what? Unpaid value of a share. That's your limited liability logic. Perpetual succession. Succession means what? If for example, Jubair dies. We did not kill him, but Jubair Kadama? Jubair itself, right? Jubair died. If Jubair dies, what will happen? At least cry a little. No. Why are you laughing, Ra? Jubair died. It's not a moment to laugh about it, but Jubair died. Do we care? If Jubair dies, we don't care about it because try to understand it. If it was a partnership firm, I'll come from a partnership law. If it is a partnership agreement, in case of partnership agreement, each of the partner we have, assuming we have 3 partners, each of the partner have agreed to bring in what to the business? Have they agreed to bring in finance? Not only finance, they were also managing the finance. That means they were bringing in skill. They were bringing in what? Finance and skill. Each of the partner was able to bring in finance and skill. Try to understand it very, very clear. A lot of different acts will be combined together. Most of you might have knowledge about it, but still I want to explain it. We have 3 partners. Each of the partner will bring in finance and skill. Now go back to Contract Act. Go back to Contract Act and try to answer this to me. If say Thiru stated that he'll dance after the class is completed. After? Otherwise we'll have a break in between where Thiru will perform a dance. Let's say assuming 12 o'clock, 12 p.m. Thiru will perform a dance. What kind of dance? What kind of dance you want to say? Salsa. Okay, salsa along with Ekant. Ekant and Thiru are gonna perform what? Salsa. If your hearts are strong, you can stay in the class. They're gonna perform a salsa for maybe 10-15 minutes of time. Okay. And for which we'll pay money. How much? That entertaining us, we have to pay money. How much? How much? 0. We'll pay money. It's a legal contract now. How much to be paid? 1 rupee. They're not performing on the streets, They're 1 rupee. How talented are they? And you're asking 1 rupee. Say, assume at least we'll pay how much? 2 rupees. So we'll pay rupees. We'll pay 5 rupees each at least. Okay. 5 rupees. Fine? No. 5 CR. Now, say assuming 5 rupees each. Is the legal contract ended? Now, if they breach the contract at 12 p.m., if they don't perform the contract, Can Maunish come and perform the dance? No. We were expecting whom to do salsa? Only Ekant and Thiru. Both of them had to perform salsa. We have been expecting that particular performance. Now try to understand it. I'm not going to go much details into it. Whenever contract is depending upon skill, who can perform the contract? The person himself or any other person? Can Chinnathiru perform? I mean his child. His child, can he perform the salsa? No. We want the contract to be performed by the concept called as promiser himself. If the promise is depending on a skill, the contract has to be performed by the promiser himself. Now try to link it with partnership law. Each partner have promised to bring in skill. And if that particular promiser promises to bring a skill, partner promises to bring skill, who should bring the skill? Partner himself. But what happens if partner dies? Can he perform? Can his legal representative? No. Same thing. Try to understand the same example in a different perspective. Thiru and Ekant performed salsa. After performing salsa, we died. I mean, not because of the dance, for whatsoever reason, we died. But the contract is still valid. Because our legal representatives will pay the money. Because payment of money was never depending on skill. But their performance was depending upon skill. If they die, can they perform the contract? Can the legal representative perform the contract? If it is not depending on skill, can the legal representative perform the contract? Now come back to partnership law, carefully answer it. Can the legal representative of partner give the skill? Company format of business. Shareholder is expected to bring what? Finance and finance only, no skill required. If the shareholder dies, let him die. Who cares? Money will be brought in by the legal representative. Does the company have any emotions? No. Do we have emotion? No. Company? No, it doesn't have emotions. Let the member die. Let Jubair die. Do we have 2 minutes of silence? No, not even 2 minutes of silence. I'll continue my business. Chinna Jubair will give me money. I mean, legal representative will give me money. Do I care about Jubair? I care about money. But when it comes to partnership, I care about skill to be brought in by the specific person. Hence, that's where the logic comes in. If a partner dies, the partnership goes into dissolution. It will dissolve because the agreement becomes void. We cannot perform the agreement anymore. Without agreement, there is no partnership. But when it comes to company format of business, do we need skill? We are expecting whom? Shareholders to bring in only finance, and if the shareholder dies, let him die. Who will perform that contract then? Legal representative. What do you mean by legal representative? His successor. Succession will happen. What's happening here? If Jubair dies, who will pay money? If this guy also dies? If that person also dies? If that person also dies, it will be succession will continue. Perpetual succession. Perpetual means continuous. Succession means carry forward to the successor. Perpetual succession. The word comes from the topic that it will continue until the company is existing. What is the logic called? Perpetual succession. Is this perpetual succession existing in partnership? No, but it is existing under. With the fact that the shareholder were expected to bring in only finance, we have the famous wordings we have here. Members may come, members may go. Company goes on forever. The members may come, the members may go. I don't care. The company goes on forever. What do you mean by forever? Until the company has been liquidated. What is it? Liquidated. How is the company coming into existence? What is the word called for bringing the company into life? Incorporation. What's the word called for killing the company? Liquidation. And who does the liquidation? Who does the incorporation? Authorities. ROCs. The authority will kill the company. The authority will bring life to the company. Everything is done by a law. It is not. It is not a natural person. It cannot fall ill. It cannot die. It cannot marry. Can you marry? What's your plans after CMA is done? Job? Marriage. Can a company marry? He's thinking about it. Think and answer, ma'am. It's fine. Take time. By the end of class, at least come to one conclusion. Can the company marry? Can the company have kids? Can the company fall ill? Can the company die? How can you kill the company? By a concept called as liquidation. Who does the liquidation? Authorities. We have the authorities. ROC will come to it. Separate property, I don't have to much explain about it. What do you mean by separate property? Company has a separate legal entity. Can the company purchase its own properties? Properties are purchased in whose name? Company's name. Properties are held in whose name? Company's name. Contracts are entered in whose name? Company's name. Transferable shares, I'll come to it when we are explaining about private company definition in a bit. Common seal is an interesting topic. I want to give you more detailed knowledge on this. Common seal was a way in which we'll authenticate the documents or contracts entered by the company. Try to understand this in a practical approach. Give me a piece of paper if possible. Fine. Thank you, ma'am. Say we are entering into a contract. Try imagine yourself in this situation. The company is entering into a contract. Is the company artificial person or natural person? But who will help the company enter into contracts? Board of directors. If the board of directors is entering it, what is the proof that we entered it? We have to sign. Authenticate the document. Who will sign it? Board of director. If board of directors signs it, it's a contract entered by company where director is acting as an agent. You went to purchase vegetables in the market. Say you are a board of director. After 5 p.m. once your office is done, you went to vegetable market and purchased certain vegetables. Contract is entered by the director on behalf of the director. Same person, he might enter into personal contracts as well. He might enter into business contracts as well. How to segregate them? Common seal. The sign of the director along with the common seal was authentication. It was done on behalf of the company. So what used to happen? Signature must be there. Along with the signature, what should be placed? Common seal. I'll show the common seal tomorrow. It is not a stamp. It is an imprint into the paper. I'll show you tomorrow. A common seal. Sign plus a common seal should be there. But there was a slight problem in this. This documents which we are submitting to ROCs today, are we submitting physical documents? Forget about companies incorporation. Our CMA registration itself is done electronically. Companies also evolved into it. Every single document of Companies Act is now filed in electronic manner. If everything is filed in electronic manner, can I say this piece of paper is not required? If this is not required, the logic of common seal is also not required. But I have to authenticate documents electronically. So what will happen? I'll put the common seal on the monitor. Then how? How should I authenticate the electronic document? We have introduced digital signature certificates. What is it called? DSC. What is DSC? Digital signature certificate. This digital signature certificate was introduced by Companies Act. Which year? Companies Act 2013 or 1956? Absolutely wrong. Information Technology Act. Digital signature certificate was introduced in the year 2000. Not 2013, it was way long ago introduced in the year 2000. By which act? Information Technology Act, which made it a possibility to submit documents electronically, not by the common seal, but attaching a digital signature. This digital signature, it was made a possibility under IT Act 2000, but it was implemented by our Companies Act in the year 2015 by an amendment. Try to understand the differences here. Was digital signature existing before 2015? Yes. But was it applicable under Companies Act? No. It was made applicable under Companies Act from the year 2015. Before 2015, did we have digital signatures? Digital signatures were made possible and made available by which act? Information Technology Act. We have this in our syllabus. We'll discuss in the near future. Way long afterwards. Maybe 2.5 months later, we'll come to it. Try to remember it. Digital signature certificate was initially introduced in which year? 2000. By which act? IT Act. But it was being accepted by Companies Act by an amendment in the year 2015. Not even 2013. Amendment in the year Amendment in the year, which year? 2000, 2015. 2015. Now try to understand the concept here. This certificate, this contracts we have were to be authenticated. How were they authenticated before 2015? Common seal. We had to put a common seal and sign it. But today we are submitting documents physically or electronically. To submit these documents electronically, do we need the common seal? But what is required? Now every single document of Companies Act is filed in electronic format. If it is filed in electronic format, every single document must be authenticated by a digital signature certificate. Now give me conclusion on it. Common seal is today required or not required? Wrong answer, I'll come to it. Digital signature certificate, is it required? Yes, because every document is filed in electronic format. Every document filed must be authenticated by a digital signature. Indirectly, digital signature is mandatory. Without digital signature, can I submit documents? So digital signature is today mandatory or optional? How is it made mandatory? They did not mention it as mandatory directly, but what happened here? A director, to act as director, this is again a concept which we'll discuss a little more detail when concept comes in the future. Just an introduction here. Directors have done frauds in the past. Are you a fraud? At least say no confidently. You might be a fraud, but at least say it that you are not a fraud. Fine? You are fraud. You are not a. You are acting as a director. Try to understand it. Before 2013, this happened in 2013. I hope I'm not clumsing it up. We are discussing about directors. DSC, I'll come to it in a bit. Director. Before 2013, we did not know what contracts were entered by director. We did not have a supervision on director. Now, do we have Aadhaar card? Do you remember the Aadhaar number? But you remember the Aadhaar photo. It is unforgettable. One of the best photos of our life. How much ever times you change it, it is still one of the favorite photos. You still remember it? You still get nightmares about it? What is more confidential, your Aadhaar number or Aadhaar photo? Aadhaar photo is more. Let the number be disclosed, let the number be leaked, I don't care. What is more important for me? Aadhaar photo is more important. Now understand this, Aadhaar number, your birth certificate is linked with your Aadhaar card. You have to open a bank account. You have to pay income taxes. PAN card is linked with your Aadhaar card. You have to purchase a property. Aadhaar card. You have to sell a property. Aadhaar card. You have to travel somewhere. Your passport is linked with Aadhaar card. You are traveling somewhere, your phone number is linked with. Forget about all this. Your death certificate is even linked with Aadhaar card. To get death certificate, you have to submit your Aadhaar card. Only then you will get a death certificate. Every single aspect of an Indian citizen is linked with Aadhaar card, Aadhaar number. Government of India has a tracking system. If that Aadhaar, with this one number, Aadhaar number, I can track everything about you as a citizen from your birth to death. Everything can be tracked from single number Aadhaar card. Obviously, implementation failed, but it was an ideology. That number will be able to track everything about you as an Indian citizen. That is your identification as Indian citizen. Aadhaar number. Similar to the logic of Aadhaar number, I now want to identify and understand how do you act as a position of a director. In the capacity of director, when did you become director? What companies did you become director? What contracts did you enter? What frauds you might have done? What non-compliances have you done? When did you exit as a director? When did you resign? Where did you resign? I want every single aspect of you as a director. I want to supervise it. For that, they've introduced a concept called as DIN, Director Identification Number. Director Identification Number is a concept introduced to supervise the director. Aadhaar number is used to supervise you as a citizen. Now, in the capacity of director, I have a concept called as DIN. Now, under 2013 Act, they've made it mandatory to have DIN. Before 2013, we did not have logic of DIN. 1956 did not have logic of DIN. Can you become director without DIN in 1956 Act? That means you can do whatever fraud you want and nobody will know. Nobody will have a track of it. Which is more open law? Companies Act 1956 or 2013? Which is more transparent? 2013. It is more transparent about how a person can act as a director. You cannot hide from it anymore. Every single transaction you have entered will be accounted in DIN number. So, without DIN, can I act as director? Mandatory or optional? This is one of the preconditions of becoming a director. Try to understand this word, preconditions of becoming a director. You have to apply for it in what point of time? Before becoming director? After. To become a director, you must have. But to apply for then, you have to apply it electronically with your digital signature. Now link all the dots together. To become director, I must have. To apply for then, I must have. So what's the first step of becoming director? Apply for DSC. So every single director has a DSC. They never mentioned it was mandatory, but indirectly it is. Because you have to have a. But to apply for then, you must have a. So indirectly DSC and after 2015 has become mandatory. Now give me final answer. Is common sale today mandatory or optional? Optional. And the common sale topic has been replaced. Replaced by what? Wrong. It was not replaced for everything. Try to understand. Are we still going to enter into contract physically also? We were just discussing about electronic documents. I agree. For electronic documents, common seal is not required. We can adjust with a common seal. Sorry, we can adjust with a digital signature certificate. But for physical contracts and physical documents, I still require. Now can I segregate it? Common seal for electronic documents have been replaced with DSC. Common seal for physical documents has not been replaced. But company stated that I'll give it as an option. You don't have to mandatorily use it. But sir, how would it make authentication that directors have entered into contract if the company is not having common seal? Are you getting the two aspects more? It can be either physical document or electronic documents. If it is an electronic document, it's been replaced with DSC. If the company is entering into physical document and it does not have a common seal, it still is required to be authenticated. To have this authentication, they have stated that it shall be signed by one director and one company secretary. If both of them sign it, I'll assume that it was a contract entered on behalf of the company. So common seal is today optional. Why is it optional? Give me proper clarity on optional category. Why is it optional? Electronic documents have been replaced with DSC. Physical documents have been replaced with two signatures. If there is only one signature, he can do a fraud. If there are two signatures, that means they have to combinedly together do fraud. It is way too difficult to find a person to conduct a fraud with. If you are the only person authenticated, can you do fraud easily? But if there are two people to sign, it will be difficult to conduct a fraud. It will be signed by how many people? Two. Who are the two people? One director and one. But company secretary is not going to come cheap. They're going to charge a huge amount of money. Huge premium will they charge for complying with the rules and regulations. Try to understand the curriculums we have for CA, CMA, CS. CA is more focused on. Does he know accounts? Does he know accounts? Does he know financial management? Does he know costing? Does he know taxation? Cost accountant. As a CMA, do we know accounts? Do we know finance? Do we know costing? Do we know taxation? As a company secretary, I'm not trained for accounts. I know accounts, basic knowledge, but I'm not trained for accounts. If you look at the subjects of company secretary, not much of accounts, not much of taxation, not much of financial management, not much of costing. I'm focused only on one area. Law, legal compliances. Now, as a company, think about it. Who is better to manage your compliances? I am more trained towards compliances. I'll be the only person who can manage it. If I'm the only person, will I charge normal amount or premium amounts? Obviously, I'll charge premium amounts. So, company secretary was a logic which was not made mandatory for every company. Every company doesn't have to appoint a company secretary. Only certain companies are required. Only large companies are required to appoint a company secretary. If the company doesn't have company secretary, concept was simple. You still have to get it signed by how many people to be safe? Two, but I don't have a. Replace it. Get it signed by two directors. Given the entire conclusion of entire common sale topic. Common sale today is mandatory or optional because of the amendment in which year? 2015, and they've introduced a concept called as digital signature certificate. Digital signature certificate was introduced in India by which act? Information Technology Act. Which year? 2000, but it was formalized into Companies Act in which year? 2015. Which digital signature certificate is replacing common seal? For every document? No. Only for electronic documents. For the physical documents, can we still have common seal? But it is mandatory or optional. If I have common seal, I'll still affix it with. Even today in 2026, I can have common seal. But if I don't have common seal, for authentication, it should be signed by how many people? 2 people, 1 and 1. But appointing company secretary is not mandatory for every company. Then I still have to get it signed by how many people? 2 people, but I don't have a. I'll get it signed by 2 directors. That's your digital signature and company secretary, digital signature and common seal topic. This I'll come back to Income Tax Act when we start this chapter. Probably 2.5 months later, I'll come back to it. You must remember this logic. DSC was introduced by IT Act, not the Companies Act, and not in 2015. It was introduced in the year 2000 itself. That's basically your features of company. What are the features we have learned here? Quickly run through that. What are the features we have? First was separate legal entity. We have perpetual succession. We have limited liability, separate property. We have not done this transferability, but common seal. Lifting of corporate veil, we just learned about it already. Corporate veil is separating whom? First of all, company with its shareholders and directors. Company is a puppet of the both shareholders, and ultimate power is in the hands of shareholders, but they delegated their powers to directors or board of directors. Majority powers have been delegated, but some powers have been reserved with the shareholders. There are certain powers which can be controlled by shareholders. There are certain powers which can be controlled by board of directors. End of the day, who can control the company? Both shareholders and board of directors. With this logic, we had the topic, if they control it, but still, who enters into contract? Company. Third party, can they file a suit? Can they take an action? Can they demand? Demand only with, because they are not able to see the shareholders and board of directors who are hiding behind the corporate veil. But this corporate veil can be misused. If they have misused the corporate veil, law states that if I have a clear understanding of abuse of corporate veil, I'll lift the corporate veil. Imagine the chart we have drawn. If the corporate veil is lifted, third party is now able to see whom? Not only the company, but also shareholders, board of directors. Will we be able to see the person who is responsible for such contract? Will make him liable. Their liability now, if corporate veil is removed, their liability will be limited or unlimited? Unlimited. Come back. Company's liability is unlimited. Shareholders' liability is limited, because we have the concept of corporate veil. If this corporate veil is lifted, their liability also becomes, they're personally liable. But when is this corporate veil lifted? There are only 2 circumstances where the corporate veil can be lifted. When it is either a clear picture that we are abusing the corporate veil, or there is a clear understanding that the court has understood that you have worked anything against the country, they can remove the corporate veil. Lot of case studies have happened. I'm not going to go much detail into it. It was your inter syllabus, not going to be asked in final. Again, I don't want to explain all the case studies here. Can we do one case study and understand the concept and move forward? I'm not going to do all the case studies that your inter syllabus. What happened here was, again, don't judge my drawings. Okay, it is hard for me to draw India itself. Don't expect me to draw other countries. Okay, this is England. Assume this is England. Obviously, that looks like England, right? Yes? Say yes. Then we have another country, Germany. This is what? Forget about Germany for the time being. We'll focus on England. Okay. What happened in this particular case study was, first and foremost, before I start the case study, I want the public policy concept clear. Okay. This is, thank you. This is India. This is India. This is Pakistan. Bangladesh. We'll capture it someday. Listen, India and Pakistan. So try to understand it. What your name, Mama? Anish. Okay, fine. Now imagine this. Anish is A-N-I. Anish is an Indian citizen, yes or no? Okay, we'll start from the basics. Anish is a natural person. No. Anish is a he's a natural person. He's an Indian citizen. He enters into contract with a person in Pakistan. Okay. He enters into contract with the person who is in Pakistan. So what's gonna happen with this contract? Otherwise, your understanding will be different. I'll take in China. He enters into contract with the person in China. So try to understand it. Once he has, say, assuming he has imported certain goods into India, for this goods imported, he has to pay price. He'll pay price. I'm not focusing on foreign currency as of now, not FEMA. Just try to understand the logic behind it. I'll pay price. I'll pay price to this person who is in China, and this person who is in China have to pay taxes. Taxes to which government? The Chinese government. They'll pay taxes to them, and the taxes will be used for their own country's development. All is good. Say, assuming you have paid a total amount of 10 CR. How much was paid? Out of this 10 CR, how much will go to his pocket, the exporter's pocket? Entire 10 CR, only part of it. A good part of it will be taken as taxes. Taxes by whom? The Chinese government. The Chinese government charged taxes here, say, assuming, just an assumption, 2 CR of taxes were charged. How much amount was received in total? 10. Out of which, how much goes into his pocket? 8. How much goes into the Chinese government pocket? 2. Any doubt? Clear? If it was a situation of war, India and China have declared war between each other. What have been declared? War. So what happened here? Anish entered into contract with a person in China. He has paid how much money? 10 crores, and this 10 crores, out of the 10 crores, 2 crores goes into the pocket of Chinese government, and Chinese government during war will use this entire 2 crores for war on India, attack on India. Now try to understand this agreement very clear. Who paid money? How much? What would I say is, Anish paid 2 crores to the Chinese government to bomb India. Deshdrohi. He gave how much money? 2 crores to whom? Chinese government to attack on India again. Allowed? This is a concept called as contract with alien enemy. If you are entering into contract with alien enemy, it is opposed to public policy. It is going to affect Indian public. That money will be utilized by the government for attacking on India again, which is a loss for the Indian public. It is a concept called as opposed to public policy. It is a contract entered with whom? Alien enemy. If I enter into contract with Sri Lanka, no. If I enter into contract with Nepal, Nepal is alien or within the country? Alien. For Indian Contract Act, what do you mean by alien? Anything outside India. Nepal is also a. Anish is a. Anish is not an alien, is a part of India. Any person outside India is a alien, and that alien are 2 categories: alien friend and alien enemy. Nepal is an alien friend. Now imagine if there was no war. Assuming China is also alien friend. If there is no war, Chinese government will use this money 2 crores for what purpose? Development of their own country. I don't care about it. Alien friend contract is valid. Alien enemy contract is. With his knowledge, come back. What happened? This case study happened during World War II. World War II happened between 1939 to 1945. Remember Hiroshima, Nagasaki, atomic bombs. We'll have history on this in FEMA chapter. A good history will be discussed on that, but later. As of now, during this World War II, what happened? Germany and England obviously were against each other. The 2 major countries. World War II started because of Germany. Adolf Hitler, heard about him at least? Your friend? Adolf Hitler started this process of invading countries and England had to step in. England stepped in. We'll discuss about this later. These are called as Axis. Germany, Italy, and Japan were called as Axis. England, US, Russia, we were forced into the war. We were called as alliances. It was Axis versus alliances, and obviously, who won in the end of the day? Alliance. Will come. Your answer is wrong, but we'll come to it. It happened during World War II in England. There was a company which was incorporated in England. Where is the company incorporated? In England. The company was in the business of tires. It is still existing one, that company, Continental Tires. Heard about it? Continental Tires. Not heard about it. One of the very big companies, Continental Tires is still existing today also. They are still doing business in India also today. Continental Tires and Rubber Company. Rubber Co. Limited. Forget. A company which is in the business of tires basically. Which is, where is it incorporated? England. Where is it doing business? In England. It is not making any exports. The only business they have is in England. Now try to understand the business correct. They were selling goods to multiple different business vendors in England on a credit basis. Once the credit period is completed, they'll go back and recover their money from England. Try to give me the basics here. Where is the company incorporated? Where is the company doing business? They're in the business of tires. They sold tires on credit basis, and once the credit period got expired, they'll go recover their money. Is it fine? This all was happening during World War II. What happened? This company went to one of the company, I'll call it as D as of now. They went to the company called as D Limited and asked for the money to be received from D Limited for sale of tires. We already sold tires. We want the money to be recovered. We asked and demanded the money. This D Limited denied the payment. Denied the payment, stating that you are an alien enemy. Where is the company incorporated? Where is the company located? Where is it doing business? Anish. Is an alien or part of the country? This company is a part of the country. It is not an alien at all. But this D Limited alleged, stating that you are an alien enemy, I'll not pay money. It is opposed to public policy. It is opposed to England's people. I'll not pay money. Then obviously what happened? This company goes to the court, filed a suit, went to the House of Lords. The Supreme Court in India, they call it as House of Lords. They went to the House of Lords. After going to the House of Lords started investigating the company, and they found out that this company had shareholders which were located in Germany. They had directors who were located in Germany. All the shareholders, all the directors except one were located in Germany. Now try to understand. Once the money is recovered, they'll pay salary. That money will go to German government. Germany, and that money will be paid as taxes to the German government, and German government will again use it for war. Again, second case. Once they have made profit, they'll pay dividend. Dividend will be paid to the shareholders, and the German government will put tax on it, and the tax will be again used for war against. If you apply separate legal entity, I'll not look behind the corporate veil, I'll look only in England. If I look only in England, contract is entered with company which is incorporated in England, money is received in England, business is done in England, it is located in England, no problem is there. But if I remove the corporate veil and try to look behind the company who are located, I'll then understand it is an contract with alien enemy. Give me the answer. Apply the corporate veil or lift the corporate veil? To understand the real persons behind the company. In this particular case, they have lifted corporate veil for the purpose of, for the benefits of the public of England, and try to answer this. The money was recoverable or not recoverable? Not recoverable. Until the war got settled. Once the war got settled, there are no more alien enemy. Alien enemy concept comes in only while you are in war with each other. Once the war got completed, now it is an alien friend again. If it's an alien friend, the contract is again valid. Usually the contracts are not becoming void, they are suspended for a certain period of time. After the war has settled down, the contract is still considered as valid. What is it? Case study called as Continental Tire and Rubber Co. Limited versus Daimler Co. Limited. You don't have to remember the case study, but are you guys understanding the concept behind it? Can we lift the corporate veil? Corporate veil is the reason why Companies Act is existing, but there are certain circumstances in which corporate veil can be lifted. If the corporate veil is lifted, who will be held liable? The company or the persons behind the company? Persons behind the company, that is shareholders and directors who are responsible for such contracts, will be held liable. Lifting of corporate veil. We'll start, that's the introduction more than fine. Now we'll start with the definitions we have. How many types of companies do we have? Classification of companies. How many types of companies do we have? Try to understand the logic behind Companies Act here. Companies Act states that there are only two types of companies: holding subsidiary, government, listed, unlisted. All these are sub-classifications of two categories of companies we have: private and public. Always remember, every kind of company have to be coming under two categories, either private or public. A lot of people have this wrong understanding of it. Section 8 company is not a separate classification. Section 8 company should be either a or. Section 8 can be either private or public. Also this part, private, a government company. Government company is public or private? It can be public or it can also be private. Government company also falls under these logics itself. It depends upon how many members you have. It depends on how do you carry yourself as a business entity. But if a private company has 51% of share capital held by government, I'll call that government private company as a government company. But government company can be either private company or even a public company. There are only two types of companies under Companies Act, either private or public. Then why do we even define companies as private and public? Why do we have to define companies as private and public? Why don't we have only one category company? What's the reason why we divide companies into categories? Small company, private company, one person company, dormant company. Why do we have to divide them? Why don't we have one category called as forget about everything company? Why? If you don't understand it, you will not understand Companies Act. Think about it. I want you guys to suffer a little. Think. Try to understand why it is given. I'll give you the logic in a bit. Try to put points together and try to understand why companies are defined. What's the reason behind companies being defined? Think. No, not at all. It's not about scale of business. Mukesh Ambani can start a private company and it will be larger than every company we have. It's not about scale of business. Nope, not about capital. No, not to identify it. Why do we have to identify if we don't even have to classify it? My point is, why do we classify it first? Give me some books, I'll give you an understanding of how it works. Give me 4 or 5 books, Amma. Not 4 or 5, I want at least 10 books on that. Remind me, I'll bring the Companies Act book tomorrow. Remind me after the class is done, I'll bring the book. Sal side 12 o'clock. What's the time? 1:45, 15 minutes. I can't. Ready? I'm not reading. Now try to understand this. Try to understand the Companies Act here. Companies Act 2013 has how many sections? Answer fast, I'm holding books. How many chapters? How many schedules? That's not all. We have rules and regulations. We have a lot of rules, regulation, amendments, circulars, notifications released on a regular basis for the last 13-14 years. A lot of rules have been added. If you combine the entire Companies Act today with all the rules and regulations, it will be at least 2,500 to 3,000 pages. 2,500. I'll bring the Bare Act tomorrow. 2,500 to 3,000 pages, entire Companies Act. And try to imagine this. At inter-level and final level combined together, you are learning till 246. It has how many sections in total? 470. Combined together at CMA Inter and CMA Final, you are learning from section 1 to 246. Out of this section 246 also, a lot of sections are not part of your syllabus at all. Spending 2.5 years of time just to learn half of Companies Act. Imagine a businessman. Sir, I want to incorporate a company. I'll throw Companies Act Bare Act at him. Go read this document, understand this document completely. Once you've understood this document, come back to me, I'll incorporate you as a company. He'll come back after retirement. I mean, understand it. Reading that book, understanding the book, and then coming and incorporating company and reading the entire Companies Act. Is it possible for a businessman? That's where we come in. That's where we come in, the experts. They appoint whom? They appoint CMAs or CS for the purpose of running their business activities, for making sure that they are complying with laws. Are you guys understanding the intensity? This is just one act a company is applicable with. One or multiple different acts. Multiple acts will be applicable. Is it practically possible for a businessman to read the laws and understand and then apply them? No. That's where we come in as chartered accountants, cost accountants, and company secretaries, help them do business activities. But do we charge premium amount? Can every company afford us? It's a business having a capital of 50,000 rupees and the CA gives a bill of 1 lakh rupees. Sell the company to me, I'll give you consultancy. What's the point of consultancy then? Every company cannot afford a chartered accountant. Every company cannot afford a cost accountant. They cannot afford the rules and regulations of Companies Act. Now, same topic, if I had to say, sir, I'm a one-person company. I'm having only one person. I have less capital. I have less business. I'm not in a position to comply with the entire Companies Act. Companies Act states that fine. I agree with your understanding. I'll not give you the entire Companies Act. I'll segregate some rules for you. Only certain rules and regulations of Companies Act are applicable to one-person company. Only certain rules and regulations are applicable to a small company. Only certain rules and regulations are applicable to a private company. Why have they segregated companies? To make sure that the applicability of rules and regulations is easy to identify. It is identified. If I had to put in every single rule and regulation, every single section for every category of company out there in the market, nobody will come under Companies Act. Nobody will get registered as a company at all. I had to compromise on certain cases. But if you're raising money from public at large, try to understand the extreme case. If you're raising money from public at large and you have done a fraud, if you have done a wrongful activity, who will be affected? Entire Indian economy. If public are affected, they'll lose trust on company. If they lose trust on company, they'll start investing or disinvesting. Disinvesting will crash the stock market. Crashing stock market, crashing companies. Public company are able to do business at large scale only because they're able to raise money from public. If they are not able to raise such money, GDP, growth, unemployment, exports, everything in India will be affected. Everything is rippled back to the point that public company have to be doing their business to the pinpoint of regulations. Can I compromise the rules and regulations? Now you know this. If the classroom does not have CCTV cameras, will you sit silently? If the classroom does not have in charge, does not have the faculty, does not have the CCTV cameras, you will sit down and study what? Law. If at all we conduct weekend exams, there's nobody to monitor it. You'll not copy? No. We never copy. Yes. Yes for what? Never copy or copy? Copy. He's accepting it boldly. I'll copy. Now try to understand. You might not copy, but you'll have that doubt to copy at least. You'll have the possibility to copy. You'll have that mindset that you'll at least have the thought that you might copy. Don't act, Amma. Don't act. You have copied multiple times in multiple exams already. Don't act as if you are very genuine in nature. Have you copied? Okay, boys, you might be genuine, Amma. You might. Now, try to understand that if the rules and regulations and controls are reduced, the possibility of conducting a fraud is increase. I mean, you are genuine category of students, but there will be other students who will copy. You are, at least say you are genuine. Other students will copy, at least the possibility of fraud will increase. But if the rules and regulations are very high, if I have Surya sir in the class, people who know Surya sir will be able to answer it. Will you copy? Never in my life I'll copy if Surya sir is there. If David sir is there in the class, will you copy? If you copy, he'll call your home and he'll say as if you are starting selling drugs in the classroom. That's how exaggerating he'll do. Beware of these two people. Now try to understand, if the rules and regulations are very high, the possibility of conducting fraud is. If I have in charge for, if say I have 5 in charges in the classroom, CCTV cameras, couple of faculties in the classroom, will you copy? There's no chance to copy. Try to understand it. Rules and regulations are high, possibility of conducting fraud is. They have an inverse relation. If the rules and regulations are less, possibility of conducting fraud is more. I cannot take risk when it is coming to a public company who have raised money from public at large. If they're raising money from public at large, I have to make sure that they are doing business with the utmost accuracy, utmost rules and regulations being followed. That means the rules and regulations must be high. The possibility of risk in such companies must be low. But if I ask every company to follow every single rules and regulations, nobody will come to companies at. I'll compromise for a private company. The rules and regulations, I'll reduce it. I'll reduce rules and regulations for private company. But sir, there's a chance of fraud. In case of which company? I'll not even leave a gap for air to come in for private company. Everything is sealed off. Every single aspect is sealed off. But for a private company, I'll compromise the rules and regulations, but the possibility of fraud will increase. If the possibility of fraud is increasing, companies had stated that let them do fraud. If they have done fraud, who will be affected? Public or identified persons? Only a certain group of people? Those certain group of people are usually their family, friends and relatives. You know relatives. You have done fraud. Their words are enough to make sure that fraud is rectified. You don't have to apply rules and regulations there. Try to understand, for a private company, if private company does a fraud even, it is not affecting the entire Indian economy. I can take risk in it. 1% company, they are doing business with a very little amount of capital. Only 1%. Can I say their fraud will not even have impact on Indian economy? Can I take more risk? I'll reduce rules and regulations. To decide on which rules to apply to which entity, we have classified companies into multiple categories, where we'll start with 2 basic categories, private company and public company. I hope you guys remember this raising of finance concept. How does a company raise money? I'm going to be very, very quick on this. You are comfortable with these numbers, Amma. Raising of money by a company always starts from the company itself. You cannot go to the company and state that I want to invest money, take my money. No. The process starts from whom? Company. If the company wants money, company will ask money. Company will ask money through a document called as prospectus. Remember? Comfortable? Prospectus to a person not called a shareholder. I'll simply call him as investor. Prospectus will be given along with an application form. Again, if you're not comfortable, you can stop me wherever you want. I'll explain the logics on a detailed basis. This is something which you have done at interlevel, but still, if you're not comfortable, I don't want to skip it. Without this, you'll not understand the next definition we're going to discuss. This is important for the next definitions concept. If you're not comfortable, please stop me there, Amma. Prospectus is an offer or invitation to offer. Invitation to offer, very good. And this application form is given along with the prospectus to an investor. So once the investor receives these 2 documents, the investor will read the prospectus, understand the company, and if he's interested, he'll fill the application form. Are we comfortable? Who starts the process? Always the company. If company wants money, they will ask money. They will ask money by giving a document called as prospectus along with an application form. The next stage will be the investor will fill the application form and send it back to the company, but company wants a proof that you are actually interested in it. Give me application money. Application money along with the application form. Once it is received, try to understand this. This is an offer. Who made the offer? Investor, he is an offerer. Company is an offeree, and always the options to accept or not to accept are in the hands of offeree. The company has two options, either accept or reject. We technically call this allot or refund. Accept and reject is Contract Act. Companies Act uses the word allot or refund. Are we comfortable with this? Who made the offer? Investor made offer to the, stating that I want to purchase these many shares of your company at this particular price. And the company may accept or may reject. Accept in the sense they will allot the shares. If not accepted, your amount will be, your application money will be refunded. If allotted, you are now actually a shareholder. When do you become shareholder? Once you have made application form, once you have received prospectus, you become shareholder when the shares are allotted. But what's the proof that you are shareholder? I'll give you a share certificate. If allotted, the company will give whom? Shareholder or investor? Shareholder now. A document called as share certificate. And to remember that you are a shareholder, because I have to provide rights to you, I'll enter your name in the register of members. Three stages of raising finance. First stage, offer or invitation? Invitation. Second stage, offer. Third stage, allotment, or I'll use the word issue. The shares have been issued. What are three stages? We'll have invitation, offer, and allot, or otherwise issue the shares. Issue the share certificates. Now give me the concepts here. If you are raising money from investor and the investor are public at large, you have to apply more rules and regulations or less rules and regulations. Can I take a risk? Can I take a risk? No. Possibility of fraud should be low. Hence, the rules and regulations will be high. Companies Act states that for a public company, I'll apply all rules and regulations. For a private company, I'll reduce your rules and regulations with one condition, that you shall not raise money from public. I am ready to reduce your rules and regulations, but if I reduce rules and regulations, I don't want the public or the Indian economy to be affected. Can you raise money from public? So issuing securities to public is allowed or prohibited? Prohibited for which company? With the fact that I'll reduce your rules. I'm ready to reduce it, but you cannot raise money from. Companies Act starts with the wording, forget about issuing and allotting securities. I'm not even going to allow you to invite the public. The words are, now you can relate to the words. You know these words. I'm not going to put much stress on the wordings, but I want the meaning behind the words. The private company prohibits invitation to public. Are you getting the logic? I'm not, forget about allotment, forget about issuing securities to public. I'm not even going to allow you to invite. Issuing of securities is the last stage of the process. Forget about that. I'm not even going to allow you to invite them in the first place. Prohibits invitation to public for purchase of securities. But the word purchase is technically used as subscribe. Give me the wordings here. Which company? Prohibits or restricts? Prohibits what? Invitation. Invitation to whom? Public. For what purpose? Subscription of either shares or debentures. Both combined together, I call it as securities of the company. That's the starting point of private company's definition. I'll come to it in a bit. I'll frame everything in slowly. But what is a private company? Rules and regulations are less. Possibility of fraud is, I'm taking a risk. I don't want public to be affected. You cannot raise money from. You cannot raise money from public. Forget raising money. You are not even allowed to invite the public. Start the wordings. A private company will prohibit whom? Sorry, we are prohibiting which company? Private company. For doing what? Inviting. Inviting whom? Public. For what? Subscription. Subscription of what? Securities of the company. Which security? Any securities of the company. Put together, prohibits invitation to public for subscription of any securities of the company. It has a lot of meaning behind it. Prohibits invitation to public for subscription of any securities of the company. The logic clear? Comfortable? If I'm not allowed to invite public, whom can I invite? I have to raise money to do business end of the day. Whom can I invite then? Nope. Identified persons. Select group of people. What are they called as? Identified persons. They're not public at large. These are the people who are known to me. The second category we have is identified persons. We have done this. Identified persons are also called a select group of people. I can call select group. Who are select group of people for private companies? Family, friends, and relatives. Usually these are the three categories from where I'll raise money, or from my existing members also. Existing members I can raise money. Try to understand it. Identified persons are nothing but they are identified. They are not random people. They are identified. I know them. They are people who are known to the company. If I'm raising money from these known people, try to understand it. I'm raising money from known people. Okay, I'll give you a little bit of introduction of 42 as well. Private placement topic. I hope you guys remember this. Company will raise money from whom? Identified persons. Identified persons by issuing a document. It is not called as prospectus. Prospectus is used only when you're raising money from public at large. This document is called as private placement offer cum application letter. You don't have to remember, not part of a syllabus. Basically, I'll invite by a different document. Once I've sent this to identified persons, what will happen? Identified persons will fill this and send it back to the company. Company may either allot or. Entire process remains the same, but the investor will not be public, but investors will be identified. But the point is, who are these identified persons? Who will identify them? Who identifies them? Board of directors. Okay, I don't want to explain much details into 42 Amma. It's not part of a syllabus. Just try to understand the flow of it. Identified persons are recognized or identified by the board of directors with the prior approval of shareholders. Who gives approval? Shareholders. But who identifies that this person is able to raise money? This person we can raise money from? Board of directors. These are identified by board of directors. Say I have identified 3 people. How many? I'm not going to focus on names. I want the concept clear. So I'll take ABC for this example. Be on the conceptual clarity on this. We have identified 3 people, A, B, and C. Can you invite them? Yes. Jubair. Is his name entered in this document? If it is not entered, he is not an identified person. If he is not an identified person, he is a part of the public. Can I invite him? Can I invite A, B, and C? Inviting 3 of them will not make them members directly. They have to send their applications back. Then I have to allot. If allotted, they'll become the members. Now try to understand it. Out of A, B, and C, Mr. A and Mr. B got allotted with securities. Mr. C did not even respond back. Take it slow and answer. Don't rush it. Take it slow. How many identified persons are there? How many of them become members? Not every identified person will become a. He'll be called as member only when the securities are allotted. Once allotted, he'll become a member. In this case, who are the members? A and B. Now, can I invite Jubair? Can I invite B? Securities got allotted to B. Once they are allotted, he sold the securities to Jubair. Indirectly, company sold securities to public. Allowed? Fine. So, Mr. B is not allowed to sell securities to outsiders. So, what's the flow? Private company gave securities to identified person. Identified person sold it to public. Indirectly, private company sold it to. That's the very reason we started private company topic. Allowed or prohibited? I am prohibited to invite them, but my identified persons, if they sell it, I have to also put restriction on this. Can I invite? No. That's the first point. Second point, once I've sold it to identified person, can they sell it to public? No. Think about it. Can Mr. B allot it to Mr. A? Transfer it to A? If this is clear, you should be able to answer it. Take it slow. Can the shares of a private company be transferred? Yes. But can they be transferred to any person? No. There is a restriction. I'm not prohibiting it. I'm not stating it is not allowed. It is allowed, but with certain restrictions. How and where the restrictions will apply depends on the private company on its own. Private company will put restrictions. Companies that did not give restrictions, companies that stated that you'll put restrictions on the transferability of shares. Can Mr. B transfer the shares? Yes or no? They are transferable, but they are transferable with a restriction. Sir, I'm a public company. Are my shares transferable? Restrict. They are freely transferable. For a private company, they are restricted. That's the second point. Second point of private company. First point, it prohibits. Prohibits what? Invitation. Invitation to whom? Public. Second point, forget about I am giving securities to public. My identified person shall also not give it to the public. I'll put a restriction. Restriction on the transfer of shares. And the last point, I'll put a limit on the total number of persons which shall not exceed 200 except in case of OPC. OPC is a special type of company. Again, OPC also has to fall under these two categories. Either it should be a private or public. Obviously, it will be a. I have to reduce the rules and regulation. It will be a private company. But for this OPC, I'll have one member or more than one member. One member. The concept itself states one person. Then I cannot have up to 200 members. Other than OPC, the private company will have a limit of 200 members. Give me all three categories first. What are three restrictions which make you a private company? First restriction is that you have prohibited. Give me the proper sentence. Prohibits to public for subscription of any securities of the company. Once it is prohibited, second point, you are not allowed to sell it to public. I'll put a restriction on transfer of shares, transferability of shares. Third point, I'll have a maximum of. Imagine the board of directors. Say board of directors went to the bus stop, started writing every person's name in it. Identified. They're not identified person. I cannot go around the market and start writing every person's name in the document. All of them will not be considered as identified persons. We can have a maximum of how many people? 200. I want it to be a closely held company. Closed within the four walls. I don't want outsiders to interfere into it. A private company, three restrictions will be there. These are called as restrictive clauses. What are they called? These restrictive clauses are mentioned in the articles of association of the company. Through this document, I can identify whether you are a private company or a public company. If articles of association has all three restrictive clauses, give me technical names from here. If the articles of association has all three restrictive clauses, it will be called as. Sir, I have raised money only from identified persons. I put a restriction. I have not given it to public at large, but I have given it to 10,000 people. Is it satisfying all three conditions? Is it a private company? There are only two options. Either it should be a private company or should be a. If it is not falling in the definition of private company, only other option I have is. What is public company? Anything which is not a. Other than private company will automatically become a. I don't want to put stress and defining what is public company. We have only two options. If it is not a private, then automatically it should be a public. Remember this words express implied. What is implied? Other than express. I'll define only express. Whatever is not an express is automatically implied. Are you getting the logic clear? If it is not a private company, it is automatically a public company. Private company, we have put stress to define it. But if it doesn't fall under the definition of private, it automatically means it is a public company. What is public company? A company which is other than a private company is a public company. What is private company? Other than public company. What is public? It has three what clauses? Restrictive clauses. Where are these three restrictive clauses mentioned? Articles of association. Is it fine until now? What break, Amma? Are you prepared? No? We'll take a break in 5 minutes. We'll take a break in 5 minutes. Let me complete this logic here. Now you guys have to understand, before we jump into the next concept, we have to understand the way in which our law is drafted. Next 5 minutes, stay with me. I'll give you a different concept and different knowledge which will be useful for a lot of other logics in the future. Once it is done, we'll come back and we'll take a break after 5 minutes. 5 minutes, you know. Try to understand the law structure in India. An act. We'll talk about only central act. Act is signed, assented by whom? President, and passed in both the houses of parliament. Once it is passed in both the houses of parliament and assented by the president, it is called as an act. But we are not learning act. We are learning law. What is law? What is act? Law is not just the act we have, the act to be implemented at the ground level. We need rules and regulations. Are you expecting the parliament or president to add rules and regulations? Is the parliament free enough to add rules and regulations every now and then? Rules and regulations are going to be adapting to the requirements of the ground level reality on a regular basis. Can the parliament do it? And the parliament is not an expert in the field of a particular law to understand it. Then for the purpose of adding rules and regulations, we created a separate body called as executive body. What the first body we have is legislative body, which prepares the act. Once act is prepared, for the act to be effectively implemented, we have a separate body called as executive body. This logic starts from here itself. This logic of delegation starts here. Who should have implemented? Legislative body. But legislative body did not have enough expertise to do it, nor time to do it. Then they delegated the implementation powers to the executive body. This is important to understand the next definitions. Who had the original power? Who created the law? Who should have implemented the law? But who we did not have time to do it. We are not experts in doing it. We delegated it to the executive body. Your IAS, IPS officers comes under this category, executive. They'll implement the law. But who will create the law? Legislative body. They delegated the implementation powers to the executive. This executive body for the implementation purpose gives you rules and regulations. Gives you circular. What is circular? Whenever the act is unclear in nature, to give clarification on the existing act, we'll give a circular. Try to understand, circular is not creating a new law, it is giving a clarity on the existing law. It is called as circular. Or we have notifications. Whenever we have to announce anything, we'll give notifications, we'll have amendments. All these are given by which body? Executive body. The legislative body gave only one thing, the bare act. Act alone is enough. It has to be coupled with all rules, regulations. But whether it is working correctly or not, decisions are taken by judicial body. The court system in India, the judicial body will take care of decisions, and whenever we whenever we take a landmark decision, the decision itself will act as a law. Say for example, acts entered by a minor or with a minor are void. Ab initio. Remember that sentence? An acts by a minor or with a minor are void. Ab initio. That came from a case study. It was not part of the Indian Contract Act originally. It came from a case study. It came from a decision taken by a judge. Or separate legal entity. Just learned it. Separate legal entity concept came because of the case study Salomon versus Salomon Co. Limited. It was not part of the Companies Act initially. It came into existence because of a decision taken by a judge. They are called as judicial pronouncements. What are they called? Now give me a clarity. What is law? Law is not just a one document act. Law is a combination of. Give me all possibilities. Law is a combination of. Combination of what? It's a combination of, first and foremost, act, rules, regulations, circulars, notifications, amendments, and judicial pronouncements. All combined together is called as law. Law in India is not made by one body. Law is a combination of three bodies in India in the same order always. Legislative body, executive body, and now try to understand. Take it slow. You will be making wrong answer in it. Take it slow and answer. Which body do we regularly connect with? Judicial. We will not go to court every day. We don't go to the parliament every day. What is the body which we connect with regularly? Executive body. That's the most important of all of them, but all three combined together hand in hand run India to create laws in India. So how many bodies are there in total? What are three bodies we have? Legislative, executive, judicial. Now you have this knowledge. Time value of money concept is already done. Value of rupee today will not be a value of rupee, will be not be same tomorrow. It will depreciate on a daily basis. It will deflate on a daily basis. If you have 10 rupees in 1950 and you have 10 rupees today, what will you get with 10 rupees today compared to 10 rupees in 1950? With 10 rupees in 1950, you can purchase assets also maybe. But today with 10 rupees, not even a chocolate will come properly. Inflation, value of money depreciates. Now try to understand. Whenever numbers come in, these numbers have to be changed on a regular basis. If numbers have to be changed on a regular basis, does the judicial body, does the legislative body have enough time to change it every day? No. Then those powers are delegated to the executive body. Powers are delegated to whom? Executive body. Try to understand the words of private company definition. Now you'll understand it better. Private company means a company which is having minimum paid up share capital. Why is this word added? I don't want people to just incorporate a company for the sake of it. I want people to run business. For running business, we must have minimum capital. Basic requirements should be there. They have added this word minimum paid up share capital. But the act was drafted in the year 2013. Can is the value of rupee in 2013 and today is changed? If the act has mentioned the word 2 lakh rupees, assuming, I'll give you the exact numbers in a bit. If the act has say assuming mentioned 1 lakh rupees, is 1 lakh rupees sufficient today to start business? No. The circumstances change. That means the number should also change. Because it requires a regular monitoring and regular amendment in it, we gave the power to executive body. Stop writing. Focus on the words I'm using for the next 2 minutes. The fact that minimum capital is required is mentioned by the legislative body, but how much is required, I'll not define it. You do the research at the ground level and define the number for me. How much capital is required is mentioned by which body? The fact that capital is required is mentioned by legislative body. Are we getting the minute difference between it? The amount of capital required is a fact mentioned by legislative, but how much is required is mentioned by executive body. Now add the wordings here. Minimum paid up share capital as may be prescribed. Who will prescribe this amount? Executive body. But these words are still given by which body? Legislative, but I'll prescribe. Who will prescribe it? Executive. Depending on the situation, you guys prescribe it. So they have initially for a private company prescribed 1 lakh rupees. How much? Now add the sentence again. Private company means, just listen, private company means a company which has minimum paid up share capital as may be prescribed. Who should prescribe this? Executive body. How much have they prescribed? 1 lakh. But for the last 6-7 years now, it got amended in 2018 again, 2017-18 again. For the last 8 years now, India got digitalized. Thanks to Jio, we have to accept it. Thanks to Jio, we got digitalized. India has internet access to every part of India today. Even a small kid knows how to use internet today. We have digitalized because of Jio. Again, there are other side of the coin also. They have killed the competition in India. We'll discuss about the other side and the darker side of Jio later part. Let's embrace Jio as of now for today. They have created India. They have developed Indian market. Today, can I say you can start business in your household with your mobile phone? Capital? Do I need capital to start business? We have gone beyond this. Capital is not required to start a business anymore. My mobile phone is enough to start a business today. If that is the situation, 1 lakh rupees is restricting people to start a company. Then executive body stated that it's fine. We understand the current change in the market. I'll prescribe the amount as 0. Legislative body, did it do any change in their law? No. Legislative body still has the same wordings. Minimum paid up share capital as may be. Who will prescribe it? How much is prescribed? 0. Can the executive body come tomorrow morning and give a notification 1 lakh? Increase it again? Is a word still given by legislative body? Yes. How much is the number given? 0. Who gave this number? Can the executive body increase it tomorrow morning? Yes, they can increase it. But as of now, how much is prescribed? So, practically speaking, how much capital is required to start a business? 0. No capital is required to start a business in today's market because of whom? Legislative body or executive body? Executive body. They have prescribed 1 lakh rupees or 0. Same thing happened for public company as well. Public company, it used to be 5 lakhs. They have prescribed it today as 0. Now put everything into a single frame, single sentence. What's the definition? Private company means a company having minimum paid up share capital as may be prescribed and by its articles. Articles has, what has it done through articles? Prohibits invitation to public for subscription of any securities of the company and restricts the transfer of shares and except in case of OPC limits the number of members to 200. If all 3 points are satisfied in AOA and I have that minimum capital, I'll be called as a private company. Private company is defined under section number 2 clause 68. 2 clause 68 defines what? Private company. If you are not private company, then you'll automatically fall under public company 2 clause 71. 2 clause 68 and 2 clause 71. When do we use clause and when do we use subsections? Why am I not calling it as 2 subsection 68? Nope. When the subpoints are related to each other, we call it a subsection. When they are unrelated to each other, we use the word clauses. Listed company is not linked with private company topic. They are unrelated to each other. All the definitions are unrelated. We have 97 different definitions of the Companies Act and they are unrelated to each other. We call it as clauses. If I had to put in, say, section number 13, I'll have subsections. They are interlinked with each other. I'll call it as what? Subsection. If they have no linking between them, I'll call it as clause. So here we'll be using what wordings? 2 clause 68 and 2 clause 71. What is 2 clause 71? Easiest definition. Public company means a company which is other than a private company and has a minimum paid up share capital prescribed by which body? Executive. How much is prescribed again? 0. So I can start a private company or a public company with how much capital today? 0 capital. That's your 268 and 271. Any doubts as of now? Clear? Comfortable? I want your brains to be a little fresh when we discuss a little more clarity on this 200. There are questions asked on it. There's a question asked on this 200 limit, so I want your brains to be a little fresh. Can you take a break for 5 minutes and come back? Or shall we continue? If you're exhausted, we'll take a break, otherwise we'll continue. It is not a topic to be exhausted, to be honest. These are topics which are comfortable. If it had to be a new topic, I could have given break already by this time, but this is topics which are comfortable. I'm expecting you to sit for these topics, but it's up to you now. So, show of hands. I'll check it after that in the camera later. Just kidding. Show of hands. Decide whether you want break or not. So, decided? Sorry, Amatiru. This 200 limit. Do we want break? Yes or no? Can we continue? Fine. Shall we? Yes or no? No. What no? No for class or break? Class. Chalo. No for 200 limit. We have 2 clarifications given. I have explained this word clarification. Are we adding a new law? No, we are giving a clarity on the existing law. What was the logic here? We are limiting the number of members to how much? 200. While counting this 200, how to count is a clarification given by the body, executive body. What was the clarification stating? If there are joint holders, what do you mean by joint holders? How many applications were made? 1 having how many names? More than 1. 2 or more names. They are called as what holders? If there are joint holders, they will be counted, but they'll be counted as one. If I have two joint holders, are they both shareholders? Yes. Are they both members? Yes. Are they both names entered in the register of members? Yes. But while counting it for this 200, they are counted as one. Can I have three people? I'll count it as 5 joint. You cannot have 5. Maximum is 3 you have. Can you have 2 joint holders? Yes. 3 joint holders, fine. But you will be counting them as 1. Counting them as 1. That's the first clarification given. The second clarification given is about, this is something which you can understand better at the final level now. Remember ESOP, employee stock option plan, or remember sweat equity shares? These are two categories of concept where the shares were being issued to the employees and directors. Why do we issue shares to employees and directors? Think. To encourage them to have the efficiency in the business. I'm not giving the shares just for sake of it. Rather than paying him extra salary, I'll pay him by shares. Giving him extra shares means he'll be motivated to work. Because if the company makes a profit, he's also a shareholder. He'll also get a share in that profits. He'll be more motivated to work. His efficiency will increase because of sweat equity and employee stock options. To increase that efficiency, I've given him the shares. If I've given him the shares, he's also holding shares. He's also a shareholder. But I'll look at him as a shareholder or as employee. I never gave him shares to be owner of the company. I gave him shares because he was an employee, because he had to increase his efficiency. If I don't give this ESOPs and I don't give sweat equity shares, will the employees be motivated? Will the employees be connected with the business? Will they own the business? Will their efficiency will increase? So these are integral part of any company. Every company to have a business at a larger scale must issue sweat equity shares and must issue ESOP, so that the employees are connected with the company and they work in a more efficient and optimum manner. That is beneficial for the company. But if I start giving them shares and they're also counted for 200, I'll have more than 200 employees itself. My intention was not to raise money from them. My intention was to motivate them. Hence, logic states that if you have given shares to your employees, the employees were never treated as shareholder. They were always treated with the perspective that they have to increase their efficiency. I'll not count them as shareholders at all. Get the words very clear. I'm an employee. I got sweat equity shares. Am I a shareholder? Yes. Do I still have a right to attend? Right to speak in the meeting? Right to vote? Right to eat snacks? Yes. Right to attend general meetings? I have all the rights as a shareholder, but when it comes to the counting of 200, I'll not be considered. I get in the point. I'm still called as shareholder. I'm still having all the rights as a shareholder. I can do everything a shareholder can do, but I'm not counted for the purpose of 200. Rest of the purposes I'll be considered as a shareholder itself, except for the purpose of counting it for 200. He's a shareholder, but he'll be counted or not counted? He'll not be counted. When will he be not counted? If he's been issued shares in the perspective that he is an employee. Now I have a couple of questions to close it off. You are an employee of the company. Shares have been issued to you. You have been issued shares here. Okay, try to answer this to me. If you have been issued shares during your employment, the shares were issued because you were an employee. In this period, are you a shareholder? Are you a shareholder? Are you an employee? You're an employee as well as a. Do you have all the rights as a shareholder? But will you be counted for 200? Because you are an employee. One fine morning, you resigned. You threw the ID card on your manager and came out. You resigned. After your resignation is completed, try to answer this. Are you an employee? You're not an employee, but are you still holding the shares? Are you still a shareholder? Will you be counted for 200? No. The shares were still issued with the perspective that you were an employee. Doesn't matter whether you're employed today or not. So who will not be counted? Either the present employee or a former employee, a past employee. Who will not be counted? Give me the wordings. Which employee? A present employee or a former employee shall not be counted if he was issued shares while he was in employment. Continue that. You are never given shares. You are never given shares while you are in employment. Anish, right? Anish is an employee of the company. He never had shares in the company. He's an employee or shareholder. Just an employee. After he has resigned it, he purchased certain shares from the stock market. Or the company gave him shares. At what point of time? After resignation. Will he be counted? Because shares were not issued because of his employment. Shares were issued as a shareholder. Will he be counted? Yes. When will he not be counted? If the shares were issued while he was in employment, then it will not be counted. Doesn't matter whether he is an employee today or not. Are we getting the words clear? Either he may be a present employee or a former employee. If the shares were issued while he was in employment, he will not be counted. But he will be still treated as a shareholder, but will not be counted as a shareholder. Is it fine? There have been questions on this particular part. That's your homework for today. You'll get your materials once the class is done. Again, 1 second. This private company has a question. That's your homework for today. You'll have to write it down properly and bring it tomorrow. I'll check your notes on a random basis. And you guys decide what punishment you have to get after the checking is done. Fine. You'll decide the punishment. It shouldn't be a punishment for me, Amma. It should be a punishment for you. Okay? You guys decide the punishment, but you have to write this tomorrow. First question. Both your question bank and your material for the first document will come today. The document has been sent to print. It will take maybe 4 or 5 days for the color books to come out. Before that color books come out, you will have a handout for the first chapter, both for question bank and material concept book. You will have both of them distributed today by afternoon itself. You have this homework to write and you are not having much burden today. Costing what happened, introduction itself, all topics you know. Law, to be very honest, whatever you learned is everything which we are already familiar with. Maybe some new logics might have been understood, but concepts and words are something which you are already familiar with. You have enough time to sit down and write this answer, write it. You'll make mistakes in the sense you'll have presentation mistakes. We'll learn from it tomorrow. Fine. This will be your homework for today. And you're done with 268 and 271 both. Both of them are fine? Fine. People started bluffing it. People became a little smart. If people are smart, companies act as, I'm smarter than you. If you find loophole, I'll create a new law to cover up the loophole. I'm more smarter than you. What happened? People started stating that, sir, we now understand one little fact that a private company has less rules. Public company has more rules, which is easy to maintain. Private company or public company? Private company, which is difficult to maintain, but which will be able to give you higher finances. Sir, I want high finances. I have to go to. I want low compliances. I want high finances, high amount of funds, but low amount of finances. I'll repeat the question again. I want more finances, but less compliances. There's no option for it. If you want more finances, you are obliged to have more compliances. I'm happy with less finances. I'll go for a private company. I want more finances. I have to go for a. But it comes with a disadvantage that I'll have more compliances. I have to satisfy all the compliances. Now try to imagine this. We are a public company. We have raised money from public at large. We have raised money from whom? We are which company? More rules or less rules? More rules and regulations. I have to comply with all the rules and regulations. Then, rather than doing business with the money I have raised from public, this public company acted smart and created a private company as a subsidiary company. I'll do business in the name of, because we are separate legal entities. I'll do business in the name of private company, but the funding is coming from the public at large. This company is applicable with more rules or less rules. Being a private company, it will be applicable with less rules. But forget about companies that technicality and give me the answer. They are using whose money? Public's money. They should have more regulations or less regulations. Then Companies Act states that even though you are a private company, if you are a subsidiary of a, you are deemed to be a, even though by your articles you might still have those 3 restrictive clauses, I'll deem you, assume you to be a. So give me one word answer, one word sentence. Subsidiary of a is deemed to be a, even though by its articles it is still a private company. It might be still technically a private company, but I'll assume it is as if it is a. I'll apply all the rules as if it is a public company. All the rules and regulations will be applicable. A subsidiary of a public company is deemed to be a public company. Any doubts in that? Yeah. The differences they have given in our syllabus later part. The basic differences are there. Suffix we'll learn when the topic comes in about the name clause. Rest of it is all discussed now. Shareholders and directors. Can you draft this chart with proper section numbers? I'll use this. You know these members. I've also discussed. We have already discussed the directors topic in the inter level, but still. Shareholders. How many shareholders should we have? Whenever we discuss about number of shareholders, number of directors, we'll always have the same order. Ascending order, OPC, private company and a public company. We'll have minimum and maximum. What's the minimum number of members for OPC? 1. Maximum also 1. For a private company, 2 and 200. For a public company, 7, and there is no limit. Same thing. This is your section number 3, which is defining this category, minimum and maximum shareholders. Then same thing for board of directors. Can we? (149) subsection 1 talks about number of directors, where we'll have minimum and maximum. Section number 149 subsection 1. What is exactly 149? I'll come to it later. 149 subsection 1 talks about number of directors, where we'll have minimum and maximum. We'll start with a public company which must have a minimum of. They have raised money from public at large. They are doing business at a large scale. We want more people to manage it. We want minimum 3. For a public company, we want minimum of. And OPC, they have only one guy. They'll have minimum 1. This is all fine. For a public company, they'll have a maximum of 15. Why did they have to put in the maximum limit? Imagine a board meeting with 100 directors. They'll throw chairs at each other, snacks at each other. Imagine this: 100 people in a board meeting and discussing business activities. It'll be as close as a fish market. It will not be able to come to a conclusion with a large number of people. So we had to put a restriction of maximum 15. 15 is a maximum number we can have for a director. Let it be a private, public company, or even a private company. For OPC, 15. Why 15? Why 15? This was a very debatable concept when it was introduced. Try to understand the logic behind minimum and maximum. Minimum stating that we are trying to encourage sole proprietor to convert into a OPC. Who will manage? I don't want to be connected with any other person. I want to do business on my own. If that's my ideology as a sole proprietor, the one person company shall have if it has 2 directors, I have to comply with other person. I should have how many directors? Only 1. This was to satisfy the sole proprietor topic, that the single person himself will manage his business. But Companies Act ideology was the same from the very beginning. We must have skill in one department or multiple departments. To have skill from multiple departments, can I get it from single expert? That's the reason we'll appoint one expert or multiple experts. Those experts are technically called as directors. I want one or more than one director. So companies had always believed that we should have multiple directors to run the business in an optimum manner. But sole proprietor always believed that I don't want any other person, I can manage on my own. Now company side said that I'll have to satisfy both the worlds. I have to satisfy the sole proprietor's intention that he must be the only person. I should also at the same point of time satisfy the company side ideology. We must have more than one director. Hence they have given for OPC also 15. They did not put it 1 because the company side believes that we must have more than one director. Are you getting the logic behind it? Minimum director is to satisfy whom? Sole proprietor's intention. 15 maximum directors is to satisfy whose logic? Company side logic. They have placed 15 for OPC also. Can we have OPC with one director? Can we have OPC with 15 directors? Practically possible. This is fine. This is extreme case. Now come to this extreme case. Public company. Public company can have a maximum of 15 maximum of 15 directors. I'll close off this topic. 141 subsection 1 here itself. We'll have the discussion later part again. In which ways we've started it, I'll close it off. Maximum of how many directors? 15 directors. Take in the business of Coca-Cola. It has business in more than 180-190 countries around the world. 190 countries. Not 190 branches, amma. 190 countries it has business in. Can 15 directors manage everything? Absolutely no. If the business is very large in nature, there will be situations where I'll need more than 15 directors. But that will be an extreme case, very large companies. If I'm a private company doing business with say 20-30 crores of turnover, 2-3 directors are enough, they can manage it. But if the business has thousands and lakhs of crores of profits or turnovers, will the 15 directors be sufficient? No. Sometimes the 15 directors might fall short. Hence, they have stated that this 15 has an exception. You can appoint more than 15 directors, but you have to justify it to the shareholders and get an approval from shareholders. You have to pass a special resolution. Is it comfortable until here? What's the maximum directors? The answer would be 15. But if you want to appoint more than 15 directors, it has to be approved by the shareholders by passing a. But that special resolution has an exception. This is something new for you. Until special resolution, you might know from the intel level. We can appoint more than 15, but we have to pass which resolution? But this special resolution has an exception. Explain me what do you mean by exception here? No. What do you mean by this? We don't have to pass special resolution to appoint more than 15 directors. Special resolution is required or not required? If you want to appoint more than 15 directors, give me generalized answers to begin with. How many directors can I appoint? Maximum of. Can I appoint more than 15? No, but there is an exception with the prior approval of shareholders by passing a. But the approval of shareholders by passing a special resolution is not required. We have an exception to this. So I'll not complicate it further, but try to understand. If I'm a company which falls under this exception, can I appoint 14 directors? Yes. 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 Nod it correctly, Amma. I am a company which doesn't fall under this exception. I'm a normal company. Take time and answer, don't have to rush on it. I'm a normal company. Can I appoint 10 directors? 15 directors? 20 directors? No, but again, there is a possibility that I can do so. Can I use the word yes with special resolution? I'll have two aspects. Either your answer should be yes, or your answer should be yes with a special resolution. I'm a normal company. Can I appoint 5 directors? 10, 13, 14, 14.5. Okay, 15, 20. Yes with a special resolution. But if I fall under this exception, give me the answer. If I am a company which falls under this exception, can I appoint 10 directors? Yes. 12 directors. 15 directors. 16 directors. Yes with a what? No. Only yes. Can we appoint 16 directors? With special, no special resolution, nothing is required. We can directly appoint. Are you getting the exception meaning first? What are, what are two exception companies we have? Is a government company and a Section 8 company. What are two exceptions we have? Government company and a Section 8 company. So give me the answers with the proper company's name now. Sir, I'm a private company. I want to appoint 15 directors. I'm a government company. I want to appoint 15 directors. I'm a Section 8 company. I want to appoint 11 directors. I'm a one-person company. I want to appoint 15 directors. I'm a public company who wants to appoint 17 directors. Yes, with a special resolution. I'm a government company. I want to appoint 14 directors. I'm a government company who want to appoint 17 directors. After that. Okay, fine. But this exception will be given to you only when you have not defaulted under section 137 and 92. Add the next layer of concept and add it. What do you mean by 137 92? I hope you are comfortable with them. 137 filing of financial statements with the ROC, 92 filing of annual returns with the ROC. Both the documents have to be filed with the ROC every year. Which company? Which company have to file it? Every company. Even a dormant company has to file it. Even a dormant company has to file what documents? Financial statements and annual returns. Financial statements are filed under section number 137. Annual returns are filed under section number 92. Both of the sections are mandatory. Can I say if they're not submitting these two documents, they're hiding something in the company? If they're hiding, will I give privileges to them? No. I'll not give you exception if you're hiding something. You have to file it on time. So give me the wordings here. If a government company or Section 8 company has not defaulted under section number 137 or 92, they can appoint more than 15 directors without passing a special resolution. I'll give last questions here. Sir, I'm a government company which has filed 137. I'm only using section numbers you have to get comfortable to it. I'm a government company which has filed 137 but failed to file 92. Question I'm a government company which has failed to filed section number 137 but failed to file section number 92. Can I appoint 14 directors? With fine. I'm a Section 8 company which has not filed 137 but filed 92. Good. I'm a Section 8 company who has not filed section 137 but filed 92 and I want to appoint 17 directors. What? No. This special resolution topic is not required. That the exception does not apply. That means I can still appoint but by passing a special resolution. Are we getting the clear? Conceptual clarity on that? We are creating exception for special resolution requirement. If they don't fall under that exception, that means they are still able to appoint more than 15. But they have to pass a. So can we sum up every question now? Sum up the concept first for me, then we'll sum up every question possible out of it. Section number 149 subsection 1 talks about what? Number of directors. What's the number of directors? Give me the chart. We'll always have this ascending order. One person company, private company, public company. What's the minimum? 1, 2, 3. Maximum 15 for all type of companies. Can you appoint more than 15? No, but there is an exception where we have to get a prior approval from the by passing a. But passing of special resolution is not required if you are a government company or Section 8 company if not defaulted under section number 137 and 92. If you have not defaulted in both the sections, you are given an exception. You don't have to pass a special resolution. That's the entire concept done. Give me the questions on it. I'm a private company appointing 14 directors. Keep going. First we'll close it off on this. Private company 14 directors. Private company 15 directors. Private company 20 directors. Yes, with a special resolution. I'm a public company wanting to appoint 10 directors. Public company having 5 directors. 15 directors. 2 directors. Public company 2 directors. Yes. Public company 17 directors. Yes, with a special. Public company having 25 directors. Yes, with a special resolution. I'm a government company which has defaulted under 137 wanting to appoint 14 directors. Yes, with a. I'm a government company which has defaulted under section 92 appointing 7 directors. I'm a section 8 company defaulted under section 92 wanting to appoint 17 directors. Yes, with a special resolution. I'm a section 8 company which has not defaulted under 137, not defaulted under 92. I want to appoint 11 directors. I'm a section 8 company not defaulted under 137, 92. I want to appoint 20 directors. Yes. You don't have to write it twice. Once fine. Yes. Any doubts? Section number. What is section 149? Company to have board of directors. Company should have board of directors is what section 149 states. Out of which we'll start with one category, number of directors. What is section 149? What is section 149? Company to have whom? Board of directors. Out of which the first subsection we have learned is 149 subsection 1, which talks about number of directors. So we are done with one section. What is the section we have completed? Section number 149 subsection 1. No. 149 subsection 1 also accommodates women director topic. Women director is also part of 149 subsection 1 itself. So 149 subsection 1 has two concepts in it. One, number of directors, and also the women director concept. So we have done half of this subsection. Section number 149 subsection 1, we have done only one part of it, the number of directors. Chalo, we are done with number of directors concept. Any doubts in 268, 271? Comfortable? Sure? Because I'm going to use this logic of legislative executive body we have used today in the small company's definition today. Tomorrow, you guys have to draft it on your own from there. Who has the ultimate power? Shareholders for companies for law making process. Who has ultimate power? Do they have, who has the power to implement it? Legislative body, but they have delegated it to the executive body. Always remember the flow of the logics. So it was originally who should have implemented it, but do they have time? Do they have expertise? They delegated it to the same logic we have used in companies at as well. Who has the ultimate power? Shareholders. Who should have who should have run the business? Shareholders. Do they have time? Do they have skill? They are fools. They delegated it to. Did they delegate every power? Certain powers are reserved by the, which will be exercised by the shareholders in the general meeting. Majority powers have been given to the director, board of director. Powers are always given only to. Can a single director take any action on a company side? No. Can board of directors take action? That should be enough for today. What's your homework? Will be completed? Sure. Once you got the material, don't read this topic. Promoter is not done. MOU is not done. I'm not started the promoter concept yet. Rest of it you can go through till here. Will be completed? Chalo, we'll continue tomorrow. Thank you, Ma.